Minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Good morning and welcome. This is NDTV Profit. My name is Alex Matthew and you're watching All You Need to Know. Over the next half an hour, we'll bring you up to speed with everything that you need to know to start the end of your week on the right note. Let's start with the headlines. Asian markets open on a weak note. The yen trades steady after Thursday's fall, even as inflation reaches 2%. US markets remain shut on Thursday for the Thanksgiving holiday. Indian benchmarks fall the most in 3 weeks, led by technology and frontline stocks. HDFC Bank bears gains after hitting all-time highs. Adani shares, meanwhile, gain to recoup losses. Selling continues in Nifty IT stocks as traders book profits from a November tech rally. The index rises as much as 9% during the month before pairing gains. 45 new stocks begin trading in the NSE F&O market from Friday. The BSE moves its expiration of index contracts to Tuesday, starting the 10th of January to differentiate the expiry days from NSE's Thursday. Strong support from institutional investors and partners sees the Adani Group shares rally in trade. Adani Green and Adani Energy Solution end at upper circuit, while Adani Total rises over 15%. IHC, Sri Lanka, Port Authority and Tanzania reaffirm faith in the group. Foreign portfolio investors turn net seller with 11,750 crore rupees worth of equity sold. That's the third highest single-day selling in 2024. Domestic institutions, meanwhile, net buy over 8,700 crore worth of equity in Thursday's trade. Zee Entertainment's Puneet Goenka fails to secure shareholders' approval to continue as director. Goenka's ouster marks an end to a nearly two-decade journey on the board. And India's Q2 GDP is expected to rise 6.5%. A slowing of the pace is likely on account of weak urban spending. And finally, crude oil is steady as the street awaits the outcome of the OPEC Plus meeting, which has been pushed to the 5th of December. OPEC members are set to discuss a delay in output increase all the way to March, in fact, and Brent hovers at close to $73 to the barrel. And finally, Russia-Ukraine conflict escalates, keeping markets on edge. Russia attacks Ukraine's energy installations. Putin warns of striking Kiev with the new ballistic missile. As we head to the close of what has been an eventful month, geopolitics continues to dominate the headlines. Tensions in Europe are on the boil after Russian President Vladimir Putin threatened to attack key areas in the Ukrainian capital of Kiev with the new ballistic missiles called Oreshnik, which is that means hazel in English. Putin claimed Russia hit 17 targets that were military facilities, defense industry facilities and their support systems without acknowledging the hits to power infrastructure. More than 1 million households in Ukraine were left without power following the aerial bombardment, according to a CNN report. Putin made those comments shortly after his country launched what they called a comprehensive strike on Ukraine's energy grid overnight. He called it a response to continued attacks using US-supplied missiles. Ukrainian President Volodymyr Zelensky, meanwhile, has warned that any Russian blackmail would be met with a tough response, and that's according to a BBC report. Now, in West Asia, the Israeli military has said that its air force struck a facility used by Hezbollah to store mid-range rockets in southern Lebanon on Thursday. That's after both sides accused each other of breaching a ceasefire that was agreed only this week. According to Reuters, Israel said that it opened fire on Thursday towards what it called suspects, with vehicles arriving at several areas in the southern zone, saying that it was a breach of the truce with Iran-backed armed group Hezbollah, which came into effect on Wednesday. Oil was range-bound despite the escalation in tensions on expectations that the OPEC Plus will push a proposed increase in supply to the second quarter of next year. I'm talking about the calendar year. The meeting, which was supposed to take place on this weekend, has now been pushed to next week. As of this morning, Brent crude was below the $73 to the barrel mark, and NYMEX is at sub-69. It's a quiet end to the trading week for global markets, with many shut for the Thanksgiving holiday. In the Asia-Pacific region, equity markets have started on the back foot. Japanese markets were reacting to the latest inflation data, which showed that core inflation in the capital rose in November and stayed above the central bank's target. You have the onshore market in China that has opened in the green, though, and the Hang Seng in Hong Kong is also bucking the trend, up as much as 0.2%. The yen has risen against the dollar on the possibility that the Bank of Japan will raise short-term interest rates at the next policy meeting in December. Let's turn to the Indian equity markets, though, and you saw quite a bit of selling in yesterday's session, and that really marked the expiration of the November contract. Agam is standing by to tell you about more of what panned out in that eventful session. Agam, third highest selling in a day, and just when you thought that that table had turned.
Yeah, you're right, and you know, it is unpredictable, Alex. It's something that we've been pointing out of late. We aren't on stable ground just yet. Sure, we've arrested the fall, but at the moment, given yesterday's selling, and sure, yesterday to a certain extent it was expiry-based selling that did come through, because that that decline did take everyone by surprise. But we cannot rule out weakness going ahead. For now, however, still all bets are on consolidation, but we're going to see a little bit of volatility come through. So yesterday was a day of trade where we saw 1.5% cut for the Nifty. It's a new series for the Nifty 2. The Bank Nifty also coming off by quite an extent, and by around nearly 0.8%. We move into a new week, and when it comes to the Nifty options specifically, at the moment, continue to see 24,500 calls as one with the max OI. On the lower end, it's 23,500. So at the moment, volatility is such that we're actually working with a 1,000-point odd range. Of course, given the fact that it's a new series at the moment, there's no point talking about stocks in general, but I do want to point out the FII number yesterday. And this particular FII number, coming at well over 11,700 crores, is actually, well, wiping out all the net gains that we saw in the previous 3 sessions. And well, on the other hand, domestic institutions have not put in as much as FIs are sold. So it's always a factor of worry, and it's going to be, volatile. That's just to say the least, even in terms of trade, not just today, but over the next few days.
Agam, for getting us those details. Certainly going to be an eventful end to the week. Let's see how it pans out. In the meanwhile, let's take you through a few stocks that could buzz in trade today on account of updates that have been sent to the exchanges. Varsha is joining in to tell you about the likes of Fine Organics, as well as Mahindra & Mahindra and IIFL Finance, and PC Jeweler as well, I believe. Varsha, morning. What are you picking up?
Good morning, Alex. So let's start with Fine Organics, wherein they've resumed their Badlapur plant operations, and they're working on fully restoring all other plants' activities to normalcy. Now, they've also received on account partial insurance claim, and do note that company on Jan 18 informed about disruption of operations in their plant. Then I have Mahindra & Mahindra on my list, wherein, so the background is there were reports that 8 car makers, including Kia, Mahindra and Honda, have higher than mandated fleet emission levels in financial year 2022-23, which could mean penalties of around 7,300 crores, to which Mahindra has clarified that penalty imposition are factually incorrect, and they have confirmed that no penalty has been levied or is under consideration. Then lastly, I have on my list is PCBL, wherein they've commissioned second and final phase of 40,000 metric ton per annum specialty chemical capacity at their Mundra plant, which is in Gujarat, on 28 November 2024. And the total manufacturing capacity now stands at 7,90,000 metric tons per annum.
All right, thanks so much, Varsha, for getting us those details. Let's run through a few more stocks then. KEI Industries, as well as HDFC Life and SBI Life. Mika is joining in to tell you more about that. Mika, what are you picking up? Morning.
Alex, I'll start off with KI Industries. Now, they've approved the allotment of 52.6 lakh shares via QIB, and this has been allotted to 104 qualified institutional buyers. Now, the issue price has been fixed at 3,008 rupees per share, which is just a 2.1% discount to the QIP floor price. Now, they launched the QIP on November 25 to raise these funds. Now, when you talk about who, participated in the QIP as a percentage, we have ICICI Prudential Mutual Fund at 13%, Kotak Mutual Fund at 25.5%, the Government Pension Fund Global 5.15%, and finally Motilal Oswal Mid Cap at 13%. And then coming up next, we have the life insurance company. So yesterday on one of the news media channels, there was a flash that stated and gave insight about a potential changes to the banker insurance regulations. And then we have HDFC Life, who is released a press note about this very flash, stating that the news flash is based on rumors and speculation, and that the company would like to categorically state that the information mentioned is inaccurate. SBI Life Insurance also came out with a press release regarding the same news flash, and they've said that they mentioned that the IRDAI adopts a consultative process that seeks feedback from all the stakeholders, and then goes on for any regulatory guidelines that the regulator might have about the industry. And SBI Securities has stated on the record that no, they have not been part of any such regular interactions or consultations with the IRDA, and they have not been made aware of any regulatory discussions around the bank insurance space.
Got it. All right. Thanks so much. The stock under pressure yesterday, down about 5%. Let's talk about Zee Entertainment, because this is something that you will want to watch out for in trade today. There's a significant development in the reappointment of Puneet Goenka on the board that hasn't taken place. To tell you about the context and why this is significant, I'm joined by Rucha this morning. Rucha, it is a very significant development for this company because Puneet Goenka has remained on the board, some might say longer than he should have, at least from the perspective of some of the shareholders.
You're right, Alex. Good morning. Another setback for Zee Limited is what could happen today because Puneet Goenka, who is the current director and the CEO, has failed to get shareholders' approval for his reappointment on the board. Now, remember that Puneet Goenka is already a CEO, and days before he had resigned himself from his role as a MD, that is Managing Director, because he wanted to completely focus on his operational responsibilities. But now, around 50.1% of the vote were against the reappointment of Puneet Goenka back on the board of directors. Now let me give you some more details on this. Well, as I mentioned, Puneet Goenka is currently the CEO of Zee Limited and had resigned from his role as an MD a few days back. But earlier, the board had set higher targets for evaluation of Goenka as a CEO on the basis of quarterly revenue outlook from third quarter. Quarterly EBITDA outlook also was one of the things to be watched out for from the third quarter, and they had also set higher targets, just payment of 25% of net profits as dividend to shareholders. But now all these will come into effect as the CEO, but not as the director, because he will no longer be a part of the board of directors. So if you look at the current board of directors on your screen, you will see there are 7 people which are currently on the board of CEO, which includes 1 chairman, of course Puneet Goenka as the CEO, and we also have 3 independent directors and 1 non-executive director who was recently appointed. But let's look at the share price performance, where we had seen a lot of news around Zee and Sony, wherein the charges to be paid by Zee to Sony were waived off by Sony, and that is when the stock moved up a little bit. But on an overall basis, the stock has underperformed by 50% over the last 1 year and has also given negative 20% returns over the last 6 months. So though Zee is trying to revive itself with good second quarter numbers also, which it had reported, but things like this, wherein this makes that shareholders are not yet believing in the operational capabilities of Puneet Goenka, and this might be one of the reasons why more than 50% of the votes were against the reappointment of Puneet Goenka. But we'll definitely look out for the slump in the share price today.
Right, we'll have to see how it reacts. Of course, when he did resign as managing director, you had the share price rise. Let's see how the stock reacts in trade today. The Competition Commission of India has ordered a probe into Google following Windsor's allegation of discrimination. Let's go across to Rishabh Bhatnagar, who's joining in to tell you more about that. Rishabh, can you tell us the context here? Why is there a case against Windsor? Oh, sorry, right. Against Google?
Right, Alex. This is a probe that has been ordered by the Competition Commission, and this has come after a gaming company called Windsor Games filed a complaint with the CCI. What Windsor has alleged is that it is a victim of potential discriminatory practices with respect to how Google implemented its ad policy against it. So Windsor had argued that its rivals, MPL and Zupi, were allowed to play ads and Windsor wasn't. And this is because Windsor is not a fantasy or a rummy player operator, but Google had permitted only these 2 sections of games to actually play ads on Google. Now, Google is one of the largest in terms of advertising, in terms of reach. And Windsor, if not allowed to play ads, there will be a denial of market access. So these are, again, prima facie. CCI has found Google in violation of 3 sections of the Competition Act of 2002. And these are, incidentally, the same acts that Meta was also found to be in contravention of very recently, when CCI had slapped a 213 crore rupee fine. So let's see. In the next 60 days is when we'll know what the exact findings against Google are.
Got it. Rishabh, thanks so much for getting us those details. Let's talk about a new listing, and it's not the best market, of course. It's a little bit weak heading into the end of the trading week. But Enviro is set to list today, and Anushi is joining in to tell you about the issue in case you missed it and what you should expect. Morning, Anushi. What are you picking up?
Hey, morning, Alex. So an exciting issue that we are looking at, which is Enviro Infra that I've mentioned. The company is involved in the water and wastewater treatment projects as we speak. Let's just go over some of the issue details to understand what the company is planning for. So the listing date is today, 29th November. That is what we are looking for. They came with a price band of 140 to 148, and the IPO size, the total IPO size is of 650 crore, which includes a fresh issue component of almost about 572 crores, along with an offer for sale of about 78 crores. If you look at the subscription, it had received an overall subscription of 61 times. A strong subscription coming in from the retail QIB side as we speak, and the expected listing is supposed to be at a price of 205, which is a 35% of a premium that we are looking at. How the company plans to utilize its fresh issue of around 572 crores, let's look at that. Firstly, for some of the key working capital requirements, which add up to about 181 crores, they're also going to be infusing some of these funds into their subsidiary, which is EIL Mathura, that is for 30 crore. Along with that, debt repayment is something that is on cards for the company, 120 crore of debt repayment, along with some acquisitions and general corporate purposes that we are looking for, which adds up to about 319 crore. Now, other than that, how the company has used its financials and how the financial performance has fared. So if we look at the revenue, it has seen a strong revenue growth, around 100% of an increase that we are looking at from FY23 to FY24. Even the EBITDA numbers, if you look, 95% of a growth that we are looking at. Margins mainly have remained in the 23 to 24% of a range. PAT also, we are seeing a decent 94-95% of a return. So this is on the financials of the company. But how the order book pans out, which will result in future revenues, let's look at that. Order book stood at about 1,906 crore. And they have a bidding ratio of up to 38 to 39%. So this is the order book. Yeah. So this is the overall picture we are building for Enviro Infra today.
All right. Thanks so much, Anushi, for getting us those details. An update for you from the telecom space. The Cellular Operator Association of India, COAI, has urged the Consumer Affairs Secretary for notification of rules to regulate spam calls. Varun Gakar has this report. Varun, what can you tell us?
Hi. Yeah. Thanks. So yeah, a little background for our audience. In 2024, in the June 2024, the Ministry of Consumer Affairs had released a draft guidelines for the prevention and regulation of unsolicited business communications. Now, when notified, these guidelines will empower the Department of Telecommunications to take action against all individuals, businesses and platforms that are engaged in the menace of propagating spam calls and messages. Now, the COAI, which is the Cellular Operators Association of India, has penned a letter to the Consumer Affairs Secretary highlighting the growing concern of such communications. It has said that spam calls and spam messages have become a menace for the public at large, and it is a blatant violation of consumer privacy. Now, the COAI has highlighted that relentless marketing practices are also exposing consumers to potential risks of increasing instances of sophisticated financial scams, and that the present regulatory framework is not well equipped to handle the menace. Now, for instance, COAI has flagged that OTT communication platforms such as WhatsApp and Telegram presently fall outside the regulatory framework, and the Telecom has stated that it is becoming increasingly difficult to track them. Now, therefore, the COAI has urged the Consumer Affairs Secretary to take immediate steps to notify these June guidelines so that this menace can be curbed.
Got it. All right. Thanks so much, Varun, for getting us those details. Just a quick update for you on Enviro Infra Engineering's IPO. You've got a subscribe rating from Anand Rathi, which also subscribe rating coming through from the likes of Deven Choksi as well as Bajaj Broking, all of them saying you should subscribe. We are, of course, expecting there to be a positive start to trade with the implied open suggesting a 25.26 point increase for the Nifty 50. Of course, we saw that break in trade yesterday, and you saw quite a bit of selling that emerged within the first couple of hours of the trading session. As things stand, of course, we are likely to end the week, at least hopefully, on a positive note. And that brings us to the end of this particular edition of All You Need to Know. Do stay tuned. Up next is India Market Open, and this is NDTV Profit.
I'm still a believer in King Dollar. As far as interest rates, you've got better than 50% chance of a rate cut by the Fed, so maybe that is going to take a little bit of steam out of the US dollar. But I think overall, King dollar trading into New Year's Eve would have to be the trade. And I think that volatility will remain against, the major pairs. Yen, look at that. Have a look at euro and, of course, pound.
Peter, good morning or good afternoon to you. Neeraj here. One question, Peter. If indeed the geopolitical situation looks a bit worrisome currently, will it impact the market sentiment? Thus far, there have been spurts, both in crude as well as markets, but they have recovered very quickly. Did you get a chance to look at the recent developments over the last 24 hours? And do they worry you, or are you unfazed?
Well, I'm aware of it, Niraj, and good afternoon. Greetings from Sydney. No, I think that, look, it's hit traders between the eyes, and they're very conscious as far as, the dynamic nature of, geopolitics and all of those concerns. And it is seeming to shrug it off as a term. That I'm waiting to see. I really thought, years gone by, this would have really ratcheted markets up. But at the moment, it's not gaining the traction. But that can change very, very dynamically. I know it's a long weekend into the best part of a long weekend for New York traders. But if something happens in the next 24 hours, I'm sure that will be felt as far as price. And I would think that you'll see, a return as far as volatility. It seems to trade within a range. It gets sold off, and then all of a sudden it booms again to the upside and then gets sold off. So at the moment, it's bearish, and I feel as though it'll hit an inflection point and it'll take another, run up again.
Peter, what would be the take on India right now? I mean, we've seen foreign outflows in yesterday's trade, but then, let's not look at a trend line with just one day. The China preference compared to India as an emerging market seems to have waned. The Trump trade also seems to have waned. But if this escalates, this Russia-Ukraine situation escalates, would India not be the right place to look at for investments as far as foreign investors are concerned?
I would think so, and I'll say this because, first off, it's going to be very hard for any small, medium, or even large enterprise in China to manage a 60% tariff, let alone putting another 10% on it. So I think that's going to be fairly crippling for the Chinese economy, and how they're going to impact that. I think it's going to be very, very tough leading into Q1 and certainly Q2, how that all impacts their trading around about $500 billion a year as far as exports into the US market. And I think it's about 15 or 16% of their global exports go to US. So there's the first thing. So I think you're going to do very, very well India-wise as far as flows. The next part is, where does the Trump trade go? We're still on the high, and I'm pretty sure that will continue at least for the next couple of weeks. I just want to see where we are by Christmas, whether we're going to see a blow-off. But the Russell was up 10% in the last week, so it's been extraordinary. Oh, this month, I should say. And as far as your other point, geopolitics, they're all uncertain points. I've been in it long enough. If something was to escalate, big time, then I'm sure the market will take it and digest it and probably ramp up price very, very quickly.
Peter, very lastly, we've talked about crude, we've talked about equities. Base metals has been giving us very confusing signs and signals. Piecemeal approach from China hasn't helped. Industrial-wide demand, we saw that in terms of readings that came in from Korea as well this morning, aren't looking too promising in this part of the world. How would you trade base metals? Would you consider long strategies on any of the base metals? And also, does gold become a buy with rising geopolitical stress?
I think first off, gold, yes, it'll come a buy, and certainly silver as well, Samina. Silver's running up 30.88, gold's 26.70. I feel as though that they'll go on another boom to the upside if you get that geopolitical tension. As far as copper and aluminium, copper's languishing. It's back at 9,000, aluminium at 2,600. I thought aluminium may have taken a bit of a run, but a lot of the hot air's come out of that as well on the LME. So where we run, keep an eye on gold, keep an eye on silver. I think I believe that they'll test all-time highs in December. And I think there's a lot of components that are going to drive price higher, and that is what's happening as far as Fed policy, what's happening in the Eurozone, and naturally, geopolitical tensions.
Peter, always great talking to you. You have a good weekend, and we'll see you soon. Well, it was a tough day, but it didn't come in as too much of a surprise, let's put it like that. 24,350 turned out to be the tough resistance that the markets found difficult to take out, and the bulls touched those levels and actually declined post that quick touch and go situation. The Nifty ended with a 350-point cut, down sub 24,000. For the November series itself, this Nifty has lost about 300 points. It's pretty much given up everything that we saw in terms of the last few days of trade. Geopolitical tension, expiry could have led to the fall. That's what we're attributing it to, but who's to tell what led to the bulls taking some profits off the table. Nifty is up 1,000 points from last week's low that was made on Thursday afternoon. Post that, we've recovered 1,000 points to close out the November series. 46 out of the 50 Nifty stocks ended lower. Infosys, Reliance Industries, HDFC Bank, ICICI Bank, M&M all declined quite sharply in trade. Broader markets, though, surprisingly outperformed the benchmark, and I think this is what surprises me the most. While the value is in the large cap space, it seems to be that the broader markets seem to be outperforming the benchmark, and they've done so all through the month of November, ending flat, thanks to the way PSU banking stocks gained in trade yesterday. Bank Nifty was also oscillating in a very wide range of 1,000 points. It did face resistance at 52,800. It's where it touched and finally ended the day sub 52,000. So that's what we've had. We've had a tough day of trade, but I don't think it was very surprising, Neeraj. 24,350, we've harped about this enough. If that was successfully taken out, then you could see levels of 24,500 and then 24,700. I think fair to say that the last few days could have been a Maharashtra euphoric reaction, but it's back to business, back to reality, back to US being the best trade in town, the dollar looking good, crude looking okay, and gold being a buy.
Yeah, so it was interesting that all the notes that came in post the Maharashtra election verdict mentioned that this could be the start of something positive, right? And it could well be over
Luckily
the medium
they didn't give
term.
us the timeline of it.
No, I mean, let's coincide the two that people are not really writing for 12 months, but maybe the next 3 months. Plus December, maybe a Santa rally, who knows, FIs being absent would all be helpful, right? But the interesting thing was the rollover. The rollover for the Nifty yesterday, right? And for the series, 79.3%. The last expiry was 72.9%. The 3-month averages are 76.4%. Clearly suggests that shorts have been carried into the new series. So the market is not quite approaching this series with a lot of optimism. And if there is a whiff of good news, because the market is entering into this series, market-wide, Nifty-wide positions with a bit of a bearish stance, what is to say that there will not be a short covering, if indeed there are some positives? So somehow remain hopeful. I mean, for example, IT today, right, could see a bit of a bounce. I mean,
my question is, where would the positives come from?
Absence
where
of
are
negatives.
they? Yeah, no, but that's this surfeit of negatives.
Yeah.
And I think when the Maharashtra play, I think is done for now, unless you have a very clear positive view on Chief Minister, but that's very mild.
And I think that's what most people said, right? And we saw this even with elections at the center. The election rally was rather, or the decline, both of which was rather short-lived.
It was a week.
It was a week and was back to business. And I said this as well, I don't know whether you remember, but the reasons we've fallen were not the reasons why we started recovering. So the reasons for decline, the concerns still remain.
No, but just the point I wanted to make is I think we'll have to wait and see what this escalation looks like, because they're now, both sides are talking nuclear. Is it just big talk? Will Trump coming in be the next positive trigger? Then that's mid-Jan, Jan 20th onwards. So, I mean, I don't know. It's looking rocky for today.
Yeah. I don't know. I'm not so circumspect about today's trade, part one. And two, I mean, I think on the election front, just 1-2 bit before I get to specific pockets that you should watch out for, at least according to me, that does the Haryana and the Maharashtra win, aside of what it does to the states individually, kind of reinforce the incumbent NDA government's control, and which is why I think people have turned constructive, not just Maharashtra government's individual thing.
Absolutely.
So therefore, somehow a bit more constructive
It's
on
complete
these aspects.
control. So any concerns post June 4th now have disappeared.
Yeah, so I somehow, I don't know, I may be wrong, but I think for December, maybe things don't look as shaky. But let's...
But new highs are ruled out for now.
Yeah, most certainly.
So I think as long as we remain in this range and don't break sub 23,000, the street will be okay.
Yeah, exactly.
And I think the one good thing, Neeraj and Tamanna, is expectations have eased out. So it's no more a transient trading idea where you buy and you sell and you know you're going to make money, right?
Most certainly.
It is a tough market to make money, which we completely, I think, agree and resonate with. IT, I don't know. Apart from dollar strength, tech stocks aren't looking fantastically placed on Wall Street
anymore. I think there could be a bounce today.
Yeah,
I think
there could be low-level buying.
There was no reason for IT to fall the way it did yesterday. Yes, and maybe expiry-led, so maybe that will bounce back. But, you know, two pockets very quickly. MFIs will see pain today. I mean, the note from Goldman Sachs kind of reiterating what Sridhar Shivaram told us in the interview and warned viewers about looking at the MFI space. So I would reckon that it's not just CreditAccess, Grameen, and we'll talk about that. But I think the whole space may see a bit of a red today. And CDMO stocks. I mean, we talk about the Syngenes and the Laurus's, yes. Look at the Indian CDMO pocket, the Innova, CapTabs and the others, which are domestic CDMOs manufacturing for the Ciplas and the Reddys of the world. The last 1 month performance for some of these stocks have been fabulous. So I think people are looking at the CDMO pocket with a lot of strength and certainly something that we should watch out for.
And it's also defensive play in some ways, right?
Yeah.
So there is enough and more action, but it's the FIs.
And a great listing today, guys.
Yes, you've got one. It's a small one and hence oversubscribed to the extent that it was. So we'll watch out for the listing that we have, which is Enviro Infra Engineers. After many days, I think, talking about listing, you have a stock that's going to list with a grey market premium of 40%. We've been seeing very flat listings on companies that have been phenomenal, to say the least. But this one may keep parts of the street
It also shows
excited.
you what the level of appetite is in the market for a large issue versus a small issue.
It's just, appetite
utni hi hai.
It's that typical demand-supply dynamic, right? I'll give you a little, so I'll get some more back. But for now, a few stocks that I have, it's been a tough morning to identify counters that could be reacting positively. I've got a short list. Zomato and KEI Industries, both of those have concluded their fundraising. Zomato successfully, if anyone had any doubt, closed its QIP and raised 8,500 crores at 252 rupees a piece. This came in at a 5% discount to the close of day before yesterday, actually, so nearly 7-8% close to yesterday's close. KEI, I don't know whether we've highlighted this, but this one has also raised 2,000 crores at a QIP, through a QIP at a 2% discount at 3,800 rupees a share. Lots of very solid marquee institutions came into KEI Industries. So you had ICICI Pru, Kotak, Government Pension Fund Global, and Motilal Oswal that have invested in KEI. PCBL, we've talked about this for the last few days. They've announced the commissioning of their second and final phase of a pretty significant large chemical capacity at their Mundra plant in Gujarat. Their manufacturing capacity now stands at 7.9 lakh MTPA. So large should be a positive reaction in terms of news flow, and we'd love to talk to the management to get perspective on what sort of revenues we could be expecting from this added capacity. So all in all, I think few names, not significant news flow, but I think successful completion of a QIP for Zomato and KEI and solid names coming in could be viewed positively.
I have two clarifications on my list. And I love it when we cover clarifications news, because it's you don't know if it will be seen as positive or not. The first is HDFC Life and State Bank of India, SBI Life, both took a beating yesterday. So HDFC Life came and said that potential changes to bank assurance regulations by the RDAI, which have been reported, is something which is news based on rumors and speculations and is inaccurate. Their claim is that IRDAI will not take such a decision without actually having any kind of a conversation with stakeholders. That's the same thing that SBI Life is also saying, that adopted IRDAI's consultative process and we seek stakeholder feedback. So it's not going to happen today. But look at the kind of notes that are out. And the reason why this is still, actually it's a thumbs down, please, if you can make it a thumbs down. The reason why it's a thumbs down is this is more likely to happen than not. It's a clarification.
But for today, I think it's a big bump up on the stocks.
Do you think so?
Yeah.
I think not
Let's
because, okay, let's see. I'll tell you why I think it's not, and then you're saying because they've said कि अभी तक हुआ नहीं है. I'm saying this because it's likely to happen. It's coming from a very clear direction from the finance ministry. They're not interested in banks selling insurance. In the report here is that the IRDA is going to cap bank assurance from the parent bank. And this is something very clear that has come from the finance ministry. And for big banks like State Bank of India, your job is not to sell insurance of only SBI Life. You have to sell it for everyone. So that's where the cap comes. So it's a big hit for brands like HDFC Life, SBI Life, which is why I'm saying it's a thumbs down despite a clarification. And then see what Morgan Stanley is also saying, what Bernstein is also saying. So Morgan Stanley says the IRDAI is likely to have asked insurers to limit bank assurance business. Bank assurance business to be limited to 50% of individual APE. IRDA may consider capping parents' bank percentage share, and then that really is a negative pressure unless clarity emerges. Bernstein also sees the regulatory scrutiny on bank sales of insurance, of course, intensifying, negative for SBI Life, HDFC Life, Max Fin. Proposal would prove difficult to implement and detrimental to growth. So it's a gain, in fact, for an LIC and ICICI Pru and a PB Fin. Yeah.
In fact, even for LIC, because I think there is a note. So, okay, no, please finish your point.
No, so my point is that they have, look at the quality of clarification, which is why this clarification is a thumbs down according to me, and the next one is a positive. Because my point is, what are you clarifying? You're not clarifying that, no, this is unlikely to happen. You're saying that, there will be a whole process before we do this. Yes, there will be a process, but intent from the central government is very clear that you want these companies to sell, you want banks to sell everyone's policies, not just their own insurance arms.
Agree. Yeah. So completely well taken. I just think that because it's not happened as yet, for today, there might be a bit of a bounce, one. And for players like ICICI Pru and LIC, which all, by the way, comes into the FNO segment from today, this could be construed as a positive. So you might actually see some bounces for SBI, because it had cracked quite a bit yesterday, SBI Life and maybe HDFC Life. But ICICI Pru and LIC, I'm looking forward to seeing how they react today. There might be a bit of a green.
So which is what we're saying? LIC and ICICI Pru may see a bit of a green because the loss for the other two is their gain, which essentially means if an HDFC bank or an SBI has to go out and sell insurance, they have to give equal platform to everyone and not just push HDFC Life and SBI Life's product. So, okay, we'll wait and see how that works out. But for these two counters that I've picked, which is SBI Life, even if there's a bounce back today, the news largely is negative. Now, M&M, let's come to the second clarification and why I think that's a positive. So, reports yesterday that there's a 7,300 crore rupee penalty on them for pollution, etc. So, M&M has come and said the stated references to penalty imposition are factually incorrect. They've confirmed that no penalty has been levied or is under consideration. I mean, the fact that they're saying it's very emphatically that there is no penalty, and then the size of the penalty for what the case is leads me to believe that this is in for a bit of correction. No doubt that the next stock I've chosen is a thumbs down. This is Z, where Puneet Goenka has failed to get a shareholder's note to be reappointed. 50.4% of votes were against the reappointment. Now, on 19 December, if you remember, he resigned from his role as the MD, and this comes as he wants to focus completely on his operational role. Earlier, the board had set higher targets for evaluation of Goenka. That's fine. Here's the current board of directors: R. Gopalan, Puneet Goenka, Deepu Bansal, Saurav Adhikari, Shishir Babubai, Uttam Prakash Agarwal, independent director Venkata Raman is also there. But the fact that you have a free float of 96% and 50.4% of your shareholders have come in and not voted for you as MD will be definitely a directional thumbs down for C. So yeah, those are my three.
Interesting list. M&M could be interesting also because over the weekend when the numbers come out, brokerages expect only M&M and Maruti to probably show double-digit numbers or close to double-digit numbers. All the others will probably be flatlining because of the preponement of the festive season this time around. Anyways, my three stocks to watch. First one is a brokerage note, CreditAccess Grameen. Goldman Sachs has downgraded the stock to a sell from a buy. The target price has been cut to 564 from 986. That's about, I mean, the current price is 986. That's about a 42% downside to the current market price. They expect a further buildup of stress due to over leveraging in the industry. They're negatively surprised by the accelerating decline in asset quality in Q2, and they view the recent sector derating as structural rather than cyclical. Now, I repeat, if you had heard Sridhar Shivram on our channel, I mean, he mentioned this categorically about the kind of stress that he's seeing out there. So certainly seems to reason that MFI as a space may not have great quarters coming up. CreditAccess, Grameen will see a slam dunk today, but maybe some of the others, Fusion Micros, etc. of the world might also be under a bit of a cloud. So watch out for these in trade. Watch out for Fine Organics, is going to resume the Badlapur plant operations from today and is actively working on fully restoring all other plant activities to normalcy. Maybe this gets construed as a thumbs up. So do keep an eye out for this one too in trade today. And I'll watch out for Aster DM Healthcare. Just look at that stock. We'll talk about it in detail. We'll get my colleague Varsha to talk about it. But Aster DM has a board meeting today for a preferential issue. Bloomberg reports that they might also merge Care Life hospitals with themselves. So interesting developments might happen post the board meet. Let's see if Aster DM has a bit of a positive outflow today. So that's something. These are the top three on my list to watch out for. Now, what else should you watch out for? Well, the last 2 days, the Adani Group stocks have bucked the trend, literally bucked the trend, if you will. More good news overnight for the group. Agam has all the details. Agam, good morning.
Good morning, Neeraj. So, yes, you're absolutely bang on when you say that there's been a recovery of sorts, even as we see markets wilt under pressure. And there are a handful of reasons. So in the wake of the management of Adani Group companies coming up with the clarification through Adani Green, well, that's followed with a lot of other entities, well, coming through to support as far as the Adani Group company is concerned. And I'm going to start off with the Kerala government, in fact, who has signed, a multi-year agreement. This is a concessionary agreement as far as the Adani Viridium port is concerned. And this is, of course, an extension. This paves way for earlier than expected revenue gains from the Viridium seaport. Moving on, do remember that, one of the states involved in the allegations was Andhra Pradesh. So, when it comes to the former CM, Jagan Reddy, he has also refuted the charges against the allegations surrounding Adani. And in fact, he has said that he will look to file a suit against all the media companies who have made these incorrect allegations to the tune of nearly 100 crores. Well, moving on, we also have several other entities in focus. Tanzania in one. Do remember that back in the month of May of 2024, Tanzania had signed an agreement, a 30-year concessionary agreement with the Adani Group company to operate its Dar es Salaam port, one of the terminals there. And well, Tanzania said that there's going to be no change there, and they do not see any problems at the moment. In fact, they have also extended the support, along with Sri Lanka Port Authority as well, where we understand that the chairman of Sri Lanka Port Authority has also suggested that there are plans of there are no plans for cancellation with respect to the ongoing agreement that they have with the Adani Group as well. And let's not forget, finally, it's something that we've spoken about yesterday, but it's worth reiterating that Abu Dhabi's IHC, has also reiterated their stance on Adani Group companies. Their outlook remains unchanged, as do their investments. So a lot of entities coming together in support of the Adani Group companies, and that's also one of the many reasons why Adani Group companies have advanced even as markets were under pressure yesterday.
All right, thanks for that. A bevy of good news really coming up for the last 2 or 3 days, since Wednesday morning, if you will. So in that sense, which is why I think these stocks have done what they've done. Standard disclosures, of course, the Adani Group owns NDTV, and you're watching NDTV Profit, so bear that in mind. But the 1 month charts will look bad. This week's charts, and if you just see what Adani Enterprises or Adani Total Gas, Adani Green, etc. have done this week, you will see that rub of green from Wednesday actually doing very well for them. So not bad going. Okay, but like I I was mentioning in the trade setup as well that there seems to be a fairly heightened pace of rollovers in the new series. Now, Aga, my understanding or my assessment was that some shorts seem to have been carried forth because the rollover percentage was way higher than the 3-month averages or the last month as well. How have you viewed the roles and what is the setup for the new series?
Indeed, Neeraj, again, when it comes to rollovers, they have been considerably higher. But it's also a question of whether or not this has been towards longs or shorts. And I tell you why. Because the 2 sessions prior to yesterday's expiration, we saw a lot of strength coming in. And that was followed by, yesterday's day of trade, where we in fact did see some selling come through. So it's still going to be a wait and watch. Rollover standing at that substantial mark, but we are talking about the December futures, and at the moment we're looking at a 68% increase in open interest towards what at least yesterday looked like fresh shorts. Moving on to the bank Nifty as well, what we're seeing is a decline of around 0.8%, once again back below the mark of 52,000. And let's move on and talk about the other factors here. Open interest in distribution, of course, is also looking at 24,000. That's the middle point right now. Is where we are seeing a lot of accumulation in open interest. And, finally moving down to, I'm just going to talk about the open interest gainers in today's day of trade. That's where we're seeing a substantial change there too, if we can actually pull that up. Of course, it's a new series, so naturally we will see considerable increase in open interest for a lot of these players. So Glenmark, Astral, Aarti Industries, HDFC Life, as well as Samvardhan's Motherson, all of them are looking at, that up move coming through an increase in open interest, though even though the overall picture when it comes to the market breadth wasn't very encouraging. But let's move on and take this conversation forward with Brijesh L of IDBI Capital and see what his views are here. Brijesh, good morning and thank you so much for joining in. Brijesh, let's start with your first pick of the day. What are you doing with them and what sovereign option structure are you looking to deploy?
Yeah, hi, morning, Neil. So the view, I think it was more with the expiry trade. So definitely there has been a distribution in yesterday's session. But then somewhere I believe that this level of 23,900, 23,800 is likely to act as a support zone. And maybe once we settle at this level today, also being a monthly close, I think there would be some kind of ease off will be there. But lately, post this monthly close, I think that again the buying should pick up. So as I believe that we are in the kind of a short-term bounce, and technically, if I need to take a view, then we are bullish, and then 24,500, 24,700. This would be the immediate upside which I would be taking a bet on. On the way down, 23,800 would be the immediate support. So any long positions which I will be taking, I'm having a stop loss of 23,800. So, and beside this, if I need to take it trade setup, so Indigo is something which is I'm liking. Both from the technical and the derivatives point of view, there has been a long build-up for the December series. So I believe this momentum should carry for the next couple of days. So Indigo can be bought at current price. The stop loss would be 4310 for the target of 4,500. This would be some 4 to 5 days kind of a time frame. Secondly, Oberoi Realty was from the realty space, which has seen a very good build-up, and the structure is also positive from the technical point of view. So Oberoi Realty should be bought at current price. The stop loss would be 1958 for the target of 2050.
All right. Brijesh, just a follow up on both these. In case if you want to, perhaps deploy options and just buy calls. Would you recommend that under those and under what circumstances would you actually consider something like that? Because, and I'm asking you because we are still earlier on in the December series.
Yeah, I understand that. So I would avoid Nifty at this point of time. I'm pretty confident about the Bank Nifty. So Bank Nifty, I believe this levels of current levels of this 51,900 is likely to be held. Even the percentage fall as compared to Nifty was quite little low. So I would take, if somebody wants to take a risk, then 52,000 out of the money, and somebody wants to play safe, then 51,900. So this, both these strike price is worth taking a chance, because I believe that Bank Nifty has got a support at 52,000. There are put writers who were active as of now. I believe this level is going to act support. So 52,000 or maybe 51,900. Both the call options can be bought, and with a limited risk. So that should be the buy trade setup.
Okay, Brijesh, we leave it at that. Thank you so much for joining us and taking us through your views here as far as these two specific picks are concerned, Indigo as well as Oberoi Realty. With that, it's back to you, Neeraj.
Thanks for that, Agam. So that's our daily dose of all the derivative talk that you need to know, and option strategies as well. But as we said, today is also a day of an interesting listing, because the company Enviro Engineers got subscribed nearly 90 times. Samina Johnson, as usual, to put some spotlight on the company and what she thinks of it. Samina.
I like the as usual bit, Neeraj. It's been a fantastic opening, and till yesterday, because the market sentiment was looking so much more better than it has looked in the last few weeks, the grey market premium for this one had also gone up quite sharply. But from what I understand, it's a good company, and most brokerages are very, very constructive. So there's not one single brokerage that has come in and said that this is an avoid in terms of the ones that are tracking Enviro Infra. Just to take you through a little bit about it, they list today. It's not a very large IPO. Remember, the last few that we've seen have been upward of a couple of thousand crores. The last one, of course, NTPC Green, was 10,000 crores. So this is small as compared to that. 650 crores is what the IPO size is. The price band was in the range of 140 to 148. The subscription was overwhelming. It was oversubscribed over 60 times, 61 times to be precise. Part of it is fresh issue. In fact, most of it is a fresh issue. 572 crores is a fresh issue. 78 odd crores is the OFS. And the expected listing is expected to be in the range of 15 to 25%. So you've got extremes. About 200 odd is what the street should be expecting, as Enviro will debut on the exchanges at 10 a.m. this morning. Promoters, member, hold 93% in the company, which is a big sign of confidence if you're a minority investor looking to invest in the counter. Well, what are they going to do with the money? They're actually going to spend it to expand their facility and their capacity. About 180 crores will be kept aside for working capital requirements, but apart from that, 30 crores will be invested in Uttar Pradesh. You've got 120 crores that they're using to repay their borrowings. That, of course, will help their operational efficiency for the company by reducing the finance costs. 319 odd crores, they said they're going to be looking at acquisitions. So inorganic growth is what the 300 odd crores will be used for. Now, what is Enviro Infra? The name doesn't say very much, but quickly highlight and take you through what the company is all about. The company was launched or set up all the way back in 2009. So it's an old hand in a fairly strong business in that sense. They're a leading engineering company specializing in the design, construction, maintenance of water and wastewater treatment solutions. They have aggressive and excessive capacity already from where we stand. They've completed about 28 plants they built 28 plants since 2017, and they have a very healthy order book which is up 42% with 21 projects as of December 31st, 2023. So as of last year, the projects that they hold is about 21 odd projects in the pipeline, which is up 42%. Well, why do brokers and brokerages or retail participants like Enviro Infra? One, the valuations are fairly reasonable and compelling. Second, the promoters own significant stake in the company, and a large part of the issue is fresh issue, which means that the money will be used for expansion and will go back into the business for growing and expanding. The global water and wastewater treatment market is also expected to grow by 6% to reach $521 billion by 2033. The company continues to expand aggressively. They focus on very sustainable practices, and they have a very solid established track record in delivering large-scale projects on time, suggesting a strong future growth potential. Considering all those parameters, considering the fact that the market sentiment isn't looking as bad as it did a few weeks ago, and the subscription numbers, it seems like this should be listing quite well on the exchanges this morning. In terms of financials, the company's revenue is up 116% CAGR, while profits are up 101% between between 2022 and 2024. So very, very solid growth, and valuations are reasonable. It's in a growth industry, and it doesn't have too much competition, at least in the listed space. So and of course, it's not a very large subscription in that sense. So considering all factors, Neeraj, I think they should list well. The excitement is there. Now the question is, if you do get a 35-40% uptake in opening, do you hold the stock or do you take profits on listing day?
A lot of HNI investors, Samina, seem to believe that anything related to water treatment, etc., could do really well. So maybe, just maybe.
Just say. And there aren't too many opportunities in the listed space, and this is coming in pretty cheap. So from what I understand, valuations also looking very reasonable.
Yeah, so in that sense, maybe, just maybe.
They'll stick in.
People might stick in. I mean, I know, spoken to a few people who invested and they are very keen to hold on to it. So let's wait and watch how it does. But yeah, that's Samina highlighting, as usual, what's happening in the primary markets and on the listings as well. Well, one more development that happened. Shareholders of Zee, didn't vote in favor of the reappointment of Puneet Goenka as the company's director. Now, Rucha Johnson to tell us why is this important. Rucha, take it away.
Thanks, Neeraj. Good morning. So, as you rightly mentioned, Puneet Goenka failed to get shareholders' approval to be reappointed on the board of Zee Limited, with 50.4% of shareholders voting against the ordinary resolution. Now, remember that the Companies Act require majority, that is more than 50% of vote, to pass a resolution at an AGM, and that is why Puneet Goenka failed to receive that majority from the shareholders. Now, remember that recently on 19th of November, he resigned from his role as a MD because he wanted to completely focus on the operations as the CEO, and back then the stock zoomed up in trade. So seems like the street was happy that Puneet Goenka resigned as the MD, and from this we also reckon that the shareholders don't want Puneet Goenka on the day-to-day operations as well as on the board of directors of Zee Limited. But currently, as we look at the current board of directors, 7 including Puneet Goenka, with 3 independent directors is what we have. But earlier the board also set higher targets, performance targets for the CEO Puneet Goenka, which includes stating quarterly revenue and EBITDA margin guidance, as well as targeting a payout of 25% of net profit to the shareholders. But Neeraj, if we look at the share price, well, not done well over the last 1 year, slumped over 50%, and over last 6 months slumped down by 20%, even after it had settled merger disputes with Sony. But if we look at the analyst recommendation, we'll see mixed kind of view over here. We have 9 buy recommendations, 4 hold and 7 sell, and the consensus target price still says that there's a 30% upside to the share price based on the consensus target price.
Thank you for that, Rucha. So, Zee, one to watch out today as well. We'll take a very short break, but we'll be right back. Stay tuned for more.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers.
Defensive bets. But now this development which has happened has spoiled the sentiment as far as these stocks are concerned. But the fact that it hasn't happened, so I think at least we could see some bounce back in these stocks. but it is at best likely to be a short-term phenomenon till we get perfect clarity on what is the way forward.
Nirav, okay, that was one bit on insurance. The other conversation we've been having in the studio as well is how would you look at the announcement on Z? And interested in knowing your view. So Puneet Goenka has been, not got the shareholder nod for his position on the board as MD. 50.4% shareholders voted against him. How would you look at that for the stock today?
Corporate governance has been the biggest issue at Z, and I think not being voted by the shareholders, I think should be seen as a positive development, at least as far as the short term is concerned.
No, this was an interesting debate, Neeraj, and I stand corrected, but I'll tell you why I thought it was a negative development for the company, because there is no clarity on who would be the alternative to Puneet Goenka. But I get your point that if most shareholders, it's a win for shareholders. It's a shareholder ki jeet hai, correct? So that's maybe reflecting in the first few minutes. But then who's going to run that company? Because no clarity or no clear second line or alternative has ever been there in the offing.
Yeah, okay. So that's the second question. And you may be right over the long term, who knows, it may hit. But for the short term, near term, the street may just feel that in perception that, oh, Puneet Goenka not being appointed by shareholders, so therefore, would the collective body of the shareholders have some other thoughts along with the board? Can they have a sharp, I mean, in a 140 crore population, surely we'll find somebody to do that.
So that, I mean, if he did if that was true, then there would be no political dynasties in this country. There would be no dynasties in businesses. So that's for another day. But okay, now since we've seen the first rates open up, just a quick look at how markets are behaving, and very, very early minutes yet. But is the mood severely negative today? Maybe in the first second or so. The question really is, will you see a bit of a pullback? And I want to come to you, Sudeep, on that question, and then let's just look at an M&M. There's another stock which is on our radar, again has clarified that they did not get that 7,200 crore notice. We don't know if they're going to or not. They've said we've not got it as of now, so it's false. A slight bump up in the first minute of trade, but how are you looking at M&M as a buy on the charts? And then let me extend that to anything else you're tracking in auto.
Morning, Tamanna. Tamanna, what we are seeing here is that, is that post the last 3-4 days, we have been seeing M&M being under pressure right from 3,100 levels. And the stock on the back of this news even fell harder. But even if you look at the entire auto index here, the entire auto index is on the verge of a breakdown. There is some serious selling pressure coming here. So I would not, even though M&M is an overall outperformer, for me, I would just wait right now till M&M crosses and sustains above this level of 2950, 2940 on the upside. It may open up with a slight gap, but 2940, 2950 is that level that I am watching out for, that at least some kind of a bottom formation happens here and it crosses and manages to sustain about 2950. So about 2950, yes, once again, you could start looking at long positions with 2900 stop loss, but not till 2950 is crossed.
Well, that's M&M for you in pre-open trade. It's expected to be a flat start. Don't expect fireworks. 23,900 looks like it could be breached as we get set for trade this morning. But of course, what you also want to keep in mind is the broader sentiment doesn't look great. One stock that had it pretty good and was indicating to a good start this morning is Aster DM. Still about 1.5% higher as pre-open trade settled down. But Varsha is joining us as the company, I believe, is set to meet today to talk about preferential allotment. Varsha is standing by with more on it. Varsha, what can we expect? Shareholders are getting quite excited about this board meet. In pre-open, at least, the stock is trading marginally higher.
Board meeting is scheduled today at 5 p.m. and they're going to approve equity share issuance. So basically, the board meeting is for preferential allotment of up to 5% post issue paid up capital. Now, the interesting thing here is, which investors are waiting for, there's this Bloomberg news wherein Aster DM Healthcare and Quality Care India, which is backed by Blackstone, are closing are near close to merge. They're gonna, so potentially making them one of the India's largest hospital chains with over 10,000 beds. Now both this company are expected to merge. Now the shareholders of Aster would own 57% of the combined entity, and Quality Care investors would hold almost 43%. Now this merger is aimed to boost profitability, growth and cost efficiency. Now, Aster and Quality Care are finalizing details of the transaction, which is expected to be announced today. So maybe we can hear this in board meeting. Now, Blackstone was among several PE firm and pension firm that has been considering a potential deal with Aster, and Aster shares have risen yesterday. We saw that because of this anticipation of the deal. Now, day before yesterday, we did have a news from Aster wherein they actually increased their stake in one of their hospitals called Prerna Hospitals, wherein they came out with a kind of guidance wherein companies expecting that India revenue growth of almost 18 to 20% over next 3 to 4 years. This growth will be driven by higher occupancy and capacity expansion, and they are expecting operating EBITDA margin of around 23 to 25% in next 4 to 5 years, and ARPOB, which is a key element for hospitals, that is average revenue per occupied bed, is expected to increase at 7 to 8%.
Thank you for that, Varsha. This is why you are seeing a little bit of excitement on Aster DM in early trade this morning. Let's get perspective, and of course we've got a fundamental view in terms of what we should be expecting from this board meet. But Kush, on the charts, is it looking like it's showing some strength?
It is, and there was this long consolidative phase with a positive bias, and we saw a breakout of that 2 sessions ago on the back of good volumes. The news is out now. Perhaps there could be some profit booking that might come about, but from a technical standpoint, I think the stock is on a very good footing. I think on the downside you've got support near the 470 mark, so if that is held, you could see the stock move higher. Also, there's a gap that has to be filled around the 505 mark, so there's a possibility that in this rally you could see the stock move to 505 levels and perhaps even higher. So all in all, on a good footing. If anyone's got this already holding it, then you should continue to ride it. If not, I think perhaps wait for some time, because a bulk of the move is already done, so the risk reward ratio will not be in your favor. But if you've already got a position, continue holding on for levels of 505.
Okay, that's one name. Well, some positives, but I wonder if the next stock that we are about to discuss has a slam dunk already or no, because it's the top brokerage note of the day as well. Goldman Sachs view on CreditAccess Grameen. Mahima Johnson to put that into perspective. Mahima, why is GS bearish?
Right, Neeraj, so as you rightly mentioned, it's the top brokerage call of the day, and they've double downgraded the stock to sell from buy, and they've cut the target price to 564 from 1426. So this poses a 42% downside from its yesterday's closing. Now, why it's bearish? They expect a further buildup of stress due to over leveraging in the industry overall. What they're saying is that they are negatively surprised by the accelerating decline in the asset quality in Q2 FY25. And lastly, they also are of the view that the recent sector derating as a structure is structural rather than a cyclical change. So these are the 3 key reasons why Goldman Sachs is really bearish on CreditAccess Grameen.
All right, thank you so much for that. CreditAccess Grameen seeing a bit of pain. So, I mean, look at the financials today. And Nirav, let me come to you on that. We spoke earlier in the morning about microfinance institutions. There's this clear take on CreditAccess Grameen. We're looking at the life insurance play overall. Is financial something that is giving you a little bit of worry right now? Or what would be your top picks in this space? Would you look at it right now?
Yeah, I think it's better to stay away from the tier 2 players, and I think be focused on the frontline stocks. And I think there, of course, the private sector banking space is looking quite attractive. And other than that, we've been looking at stocks selectively, stocks like Bajaj Housing Finance or Geo Financial Services. That's about it. Rest of the pack we have been avoiding.
Well, thanks for that, Nirav. Well, it's looking like it's going to be not such a great start this morning. There'll be pockets of interest which would look good. Sudeep, quick check. IT looked sold off yesterday. Now, does this become a good candidate for a bounce back? Would you consider initiating fresh longs and maybe a TCS, Infosys, LTI, Emphasis, anything you like really for the December series?
out of the IT stocks now, yesterday we saw these stocks getting battered, and from higher levels there was some selling pressure. But yes, out of these IT stocks, I would go with HCL Tech and Infosys to be added on dips, because both have now shown some good strength. HCL Tech was, as it is outperforming, it was just the first day of that profit booking move yesterday. So while if you go about the levels, then HCL Tech 1810, 1820 will act as a support on the downside till the time this is held. 1810 is held, we could see a bounce back till 1900. And if we even just have a look at Nifty IT, Nifty IT also is above its 20-day exponential moving average, which is placed somewhere around 42,500, 42,600 mark. So till the time this zone is held, I feel that there could be some consolidation, and post that once again the trend could be resuming on the upside.
Okay, well, 5 minutes left for the markets to kickstart. We're gonna have a rocky, if not a rocky beginning, a flat beginning, not a rocky beginning, quite unlike yesterday. But the point being, can the market breadth hold out? Because yesterday too, the breadth was in the green, even if the markets largely were in a bit of a tizzy. So that's insurance is one. Even though Kush, if we have spoken, I want to pull up Z Entertainment firstly, and I know we've spoken about it twice already, but Z becomes a very active stock. And Kush, even if we've spoken about it, now that we know the rate to Z, it's 129, it's opening 4.5% higher. It's no longer as trader friendly a stock as it used to be. Would you trade it this morning at these levels?
I wouldn't. For me, it squarely falls under the SpiceJet, Vodafone category, where you see a lot of trader interest, a lot of retail interest, but it's not really materialized into a lot of gains. And if you see the medium-term trajectory, at least over the last year or so, the trend has been lower. Now, while the stock is holding above the 20-day moving average, and today it'll open above the 50-day moving average, so you've got a few technical points going for it. But because there has been such a sharp cut and an unsustainable up move, over the last year or so, there's a possibility that even this rally might fizzle out. So I'll wait for some levels on Z. Broadly, that level comes to 140. If that is taken out, if that is sustained, will you see a move higher? But up until then, this could be a trading bounce which could be sold into. So I will not initiate a long position on Z just yet.
Kush, I don't even think traders have made money on Z. This is such a difficult stock. Forget fundamental investors. I have not heard of a single technical trader as well who's actually gone on and said I've made money on Z. This one, best avoided. The stock might be up 5% in pre-open trade, but it's not here to stay, is what we can all agree. IT has done okay. I want to quickly get a view on HDFC Bank, Sudeep. Yesterday actually the week has been pretty good for HDFC Bank. This morning as well, it's around 1800. Good level to get into. A couple of brokerage calls that have upgraded the stock. But for 50-100 rupees, would you go long for December on HDFC Bank?
Yeah.
Sudeep, you're on mute. Yes.
Yeah, I would like to go long here, because see, this is one stock which has supported Bank Nifty till now, and the stock in the last 2-3 days, the price action has suggested that it has now crossed and sustained above all its important swing highs, which were placed around 1785, 1780 levels. Whether you talk about the July or September highs, all those have been taken out, and the stock is firmly trading above that. Any dip towards that mark of 1790, 1785 can be used to go long. And overall now, support on the downside for this stock would be around 1750, where the 20-day exponential moving average is placed. And till this is held, I feel overall the stock could head up to 1850, 1870 zone. May not be too fast, but yes, the trend is still firmly on the upside.
Just a few of the gainers as the pre-open market has settled and Adani stocks back in focus. Adani Green, Adani Energy, popping today. You are also seeing HDFC Life showing a bit of hope after those clarifications coming in. Honasa is having a second good day in a row, as is PCBL. Macrotech also showing some action there. Kush, anything that you would pick looking at the pre-open action?
Well, one stock that is popping up, and I would have loved to recommend Polycab. I mean, I'm sure I can, but Sudeep's already mentioned, so I'll give another one, which is CAMS. This is also one stock that we discussed yesterday during closing. 3 good sessions yesterday on the basis of relative strength alone. This stock makes the cut. So I think for targets of 51.50, this is very much a stock to consider on the long side, and your stop loss comes in close to 47.50 kind of levels. So CAMS on strong footing, good volumes and relative strength. It's got a few things going for it. So Polycab, in fact, yesterday was one of our picks during the closing show as well, and it closed at the high point of the day where the markets were exactly opposite, and closed at the low point of the day, or close to the low point of the day, and there we had targets of 7,300, 74.50, and 69.50 was the stop loss. So continue on Polycab.
Okay, 6 seconds left for the markets, but watch out for Polycab. Seems to be a consensus idea from both our experts. So that's something you want to keep an eye out for from a trading perspective. But here is the first trade. It's a 0.25% higher. So good start, really. I mean, we did a bit of a corrective move, largely because of expiry-led fears yesterday, maybe. A combination of geopolitics and expiry. But flattened out completely. IT2 not quite correcting the same vein that it was correcting yesterday, but down nevertheless. Not as good and brisk as the bank Nifty. Broader markets flattish. Let's get the heat map up on the screen and see if life insurance is bouncing back. Yes, it is. HDFC Life a couple of percentage points, SBI Life about 1.7%. This may be a day's move, by the way, or maybe a morning's move as well. But let's wait and watch. The correction yesterday was severe and a bit of a pullback out there. Dr. Reddy's up. Adani Enterprises continues to move up. Probably the 3rd day or the 4th day on a trot now that Adani Ent is in the green. HUL, Sun Pharma, NTPC amongst others. Adani Ports makes a bounce back today, by the way, after a corrective move. But a lot of green, very little red. IT sulking yet again. I was of the opinion that IT could bounce back. Clearly not seeing that. With the 2 biggies, which is TCS as well as Infosys and HCL Tech, actually all 3 are in the red this morning. So that is the one which is pulling it down, but a lot of green and life insurance clearly standing out.
We'll have to see if strength really picks up, but not a bad start at all for the markets after the kind of day that we've had yesterday. Let's pull up the sectoral indices just for a second if we can and see what's working. We already know that IT stocks will probably be at the bottom, and there they are about 0.5% down. Realty has been hurting. Nifty Media, I suppose, because of Z being propped up there. Dr. Reddy is pushing up the Nifty Pharma and healthcare pack. Energy stocks doing okay this morning, and oil and gas in focus. No clear trend. So let's get to the specifics and the stock ideas that we're talking about. Adani stocks back in focus. Adani Green, Adani Energy. We saw Ports and Ent also working on the Nifty. But let's look at how they have opened. Remember, this was an island of green yesterday in an otherwise very tough market. So 9% up on Adani Green, and Energy about 7% up. Z, we talked about Puneet Goenka's bid to be director has been rejected. 50.4% shareholders have voted against it. Market seems to be welcoming it for the moment. HDFC Life and SBI Life, Neeraj mentioned it, but I'll reiterate, those clarifications have worked, but it's coming off. It's bump up this morning. In the long term, is this cap on bank assurance something that these companies will have to live with? Actually, we should have quickly pulled up LIC and ICICI Pru as well, but if we can, that would be great. CreditAccess Grameen, the other one that we are looking at, double downgrade by Goldman Sachs. 11% down. This is the pain point of the day, I would say. Aster DM, big deal between Aster DM and the Care Group chain of hospitals is going to shake up the industry. That's what's expected. We'll know there's a board meeting today, 1.2% up on the stock. I'm wondering if we can see what LIC and ICICI Pru is doing so we can get a broader idea of this space, and those two up in the green. It's expected that they will benefit if big banks have to sell all products of insurance companies and not just their own. But that's the long and short of it. I think a little bit of a slower start for a Friday, a wait and watch mode.
Such a bad thing, Tamna. It is Friday, so we should take it easy and not have too many people going home with losses. But I think you've highlighted most of the counters that are in focus, and I think the easy trade this week was Adani, right? Go long on Adani Wednesday morning and you've laughing your way to the bank. Those gains continue to roll in. I mean, look at that. Adani Energy up 7%, Adani Enterprise, and I think that's the two counters that are supporting the Nifty as we see it right now. Adani Green up 8%, Adani Energy up 8%, Z Entertainment is up 5%. Honasa has also been looking good over the last few days. This morning is no different. The stock is up about 6.5–7% is what we have. NCC is looking good, 4.5% higher. Adding to the Adani list is Adani Total and Adani Power, both trading with 3 to 4% gains this morning. Keynes Tech looks good, 3% on the stock. Aegis Logistics is up 3%. Newgen Software, they've managed to bag a pretty big deal in terms of relativity, of course. And the counter is responding well, up 2% on that. A quick check on how Zomato, KEI are doing. They've concluded their fundraising plans. The stocks, interestingly, Zomato is still down 1% despite that 8,500 crores coming into their bank. KEI is up about 0.5%. Take a look at Swiggy while we're at it. It's always good to see how Swiggy and Zomato work. They've not really been they have been working in tandem with each other. Swiggy reflecting the similar sort of cut that Zomato is this morning. Pharma is not looking too bad. Fine Organics is up 2%. Angel One is having a positive morning. On the sell side, Tamanna's already highlighted how CreditAccess Grameen is down. It was down 11% at the get-go this morning, now down 8%. You know, your shipbuilders, that was the theme for most part of this week after Maharashtra state election outcome, are seeing some profits being taken off the table. So Cochin Shipyard, Bharat Dynamics, actually even Defense as a pack is all trading with a negative bias as we see it. Mascot Docks, Bharat Dynamics are all trading with cuts in early trade this morning. 361 MAM is down 2.5%, but no real trend emerging. If I can quickly pull up Bank Nifty and see what it's getting up to, and then do a check on the PSU index, because that held out in trade yesterday. Bank Nifty is up comfortably above 52,000 for now at least. The PSC index is trading flat. Broader markets that closed out flat yesterday, outperforming the benchmark. Let's see what they are doing. They're also trading in line with the Nifty itself. Nirav, come in on this one and help us understand this, right? For most part of this year, most fundamental analysts and stock pickers have talked about how the value is in the large cap space. But unfortunately, the large cap rally hasn't picked up. And for whatever it's worth, even when the markets did bounce back recently, the leadership came in from the broader market names. So stocks that were down 30–40%. Now, I know these have probably a high down capture ratio. There is momentum. But if one is seeking not very aggressive returns, but also not underperformance, do you feel like there are more opportunities in the broader market universe?
Yes, definitely. I think in the broader universe, we have to be very, very selective. But if you just see the commentaries of quite a few companies, they have given very strong guidance and the vision documents till 2030. So just take the case of companies like Praj Industries. Praj Industries, they have recently come out with a presentation where they intend to triple their revenues by 2030. Then there is a company, Piramal Pharma. They have targeted 2 times revenue growth by 2030. We had a very interesting presentation from Indian Hotels Company Limited, where they are also targeting revenues to double by 2030. The expansion plans have also been highlighted very, very clearly. We are also looking at companies like Varun Beverages, which recently completed their 7,500 crore QIP. So, of course, all these proceeds will be used to fund expansion plans. So we are keeping our eyes on these type of companies, those companies where there's a lot of clarity and where they are talking about the sector also. So I think particularly the Indian Hotels presentation was very, very impressive. It also talks about the hotel sector. It's at a cusp of a new beginning. And I think that was followed by presentations from ITC Hotels, East India Hotels. So we like this space very much, and we started looking at it in a very serious way.
Okay, so Indian Hotels is one pick as well that you're seeing. You know, Kush, I'm just wondering that would you have a constructive bet right now on any of the Adani Group stocks from the run-up that has already come in? Are you seeing a further upside?
So I was constructive on Adani Ports, even Adani Enterprises yesterday or day before, if you remember, we had that discussion. My only concern is that, the up move isn't really as sharp. And what do I mean by that? It is sharp. In fact, if you see from the bottom that it made, it's just that, if it was the news impact and if that is out of the way, then the stock could have perhaps regained the, entire loss that it made, which it did not. It's on the way there, but it's still not there yet. So this could also be because of the way the markets are shaping up. I would still remain constructive, on both the stocks. But my first preference would be Adani Ports, and here my positional stop will come at 11.30. And as far as Adani Enterprises goes, here my positional stop is close to 23.50. So long on both of these. It's just that you could have a gradual recovery and not like a one-way, upswing all the way up until the gap that was created when the news came about and the stocks fell.
Okay, standard disclaimers there, of course. Now, news coming in that's also flashing on your screen, and we'll get Vishwanath Nair up on it in a bit. The Finance Ministry has proposed to raise FDI limits to 100% from 74% in insurance companies. So, net owned funds requirement for foreign reinsurers are proposed to be reduced to 1,000 crore rupees from 5,000 crores earlier. So, significant reduction there. Proposal to empower IRDAI to bring down entry capital. Remember, the winter session of Parliament is on, where this was expected, but there was no clarity on when it would happen. Now, the proposal to empower IRDAI to bring down entry capital requirement for companies in unserved and undeserved segments on a case-to-case basis. So, what that does is, and this is a ministry document from last night, a circular which has come in from the Finance Ministry, which is why perhaps you're seeing that kind of a spike in insurance companies. It opens up the space for new players. It's very, very positive for incumbents, and it also helps get FDI in. It's completely change in stance or loosened up the FDI rule. So that's why insurance is in focus, and we'll just try and get Vishwanath up. But Nirav, we've been talking about insurance, so much news flow from so many angles. As a business, do you like insurance at all? Would you be looking at it?
Yes, definitely. I think it's a business which has got a long gestation period, but I think once the returns start coming in, then I think definitely the prospects are quite strong. And considering the fact that the penetration of insurance has been increasing in the country, I think overall positive as far as the sector is concerned.
Nirav, if you track this closely, is there going to be a beeline for increasing the stake into some of these players in the first place? Simply because even if there is an FDI availability, I don't see the larger insurance players, HDFC or SBI, really wanting to give up so much stake. I mean, 100% is a separate thing altogether. I don't think they'll be even giving more than 51%, right? So it's great for maybe some of the smaller players to get it. The larger players won't benefit fundamentally out of it.
Yeah, the larger players already have the benefit of scale, and essentially they have better quality margins also, a better hold over the market.
Nirav, excuse me. Nirav, no, sorry, not talking about scale. I'm just saying ownership, right? Why would they give up majority ownership?
Yeah, so with the kind of efforts which they have put in to build up all this scale, I think they would not want to part away with the stakes so easily. But of course, for the smaller players who are in need of capital, definitely they could look at giving away some stake to the newer players.
Interesting to see. By the way, they've cooled off completely, some of these names. LIC is separate, viewers, because I think there is maybe one brokerage note today which says that with this bank assurance thing, the one which is the least impacted is LIC. The fact that it comes into the FNO space as well today, starting today, is important. By the way, we'll talk about DMart a bit later on, but because that comes into the derivative space as well. But insurance is the big thing and we should stick to it. So, Sudeep, are you there with us? If you are still there with us, I would love to know, between an LIC, HDFC Life, SBI Life, with the first 10-12 minutes gone now, what's the trade on the life insurance companies?
So, out of all these insurance names, what we are seeing now, even HDFC Life also is not seeing much of a focus. There's some pressure even at higher levels there. But what I would really go with is LIC, because last few couple of months, in fact, right from October, there is some kind of a base formation happening. And last few days, we have seen a serious uptick, and I feel there is a consolidation breakout here. So LIC would be my top pick out of the entire insurance space right now. And at current market price of 956, I feel a stop loss of 920 would be a decent stop loss. And on the upside, we could see the stock head back closer to 1030, 1050 levels, because this was a big outperformer until July, and steadily it has now slid into a period of consolidation. Now I feel this is a time for this stock to once again bounce back.
Vishwanath Nair joining us for more on that story. So now, this was, I believe, a notification from the Finance Ministry last night. Vishy, is this something that will go through the process in Parliament? At what stage is it, and what is the intent behind it?
Right, Tamanna. So what the government intends to do is bring up the FDI limit to about 100% from currently 74%. What they also want to do is for foreign reinsurers, they want to bring down the net owned capital requirement from 5,000 crore to about 1,000 crore. It is also intending to empower the IRDAI to ensure that the entry capital barrier is lowered for companies which are specifically targeting underserved or unserved areas. These are all proposed amendments at this point in time. What the Finance Ministry has said is that it has invited comments on these proposals, and depending on the commentary, then they will come out with draft sort of norms, draft regulations, which will then be brought into formal amendments. So there is a long way to go at this point in time. This is still just a proposal stage. Depending on when the announcement, when the responses are received, the deadline for now is set at 10th of December. After that, we'll see this process move ahead. Suffice to say, still very early stages.
All right. So this is the big story to watch today, and of course the question that Neeraj asked, that you can open it up, but are there takers? Are there takers?
Are there givers?
Yeah, are there people who want to come? And I think yes. This is a highly underserved market.
Yeah.
So foreign players will want to come.
But are there companies in the large space who want to give up so much of ownership, right? I mean, if I was in HDFC Life, why would I give up, even if FDI permits me 100%, why would I give up 100% ownership to a foreign player?
Yeah.
74 have SAB, right? You can go up to 74, they are not even there.
I mean, there could be many permutations and combinations come in. Smaller players with a large global player comes
That
in.
will happen.
Because the push is very clear from the government's end. We need to insure more Indians, by hook or by crook or by whoever does it. So,
completely.
So you'll have to be ready for that. All right, I quickly want to thank Kush, Sudeep and Neerav for joining us today as we start our first corporate conversation this morning. Thank you so much. Let's shift attention to the auto sector. Has been in focus for a whole variety of reasons, and we're speaking today with Rakesh Sharma, ED at Bajaj Auto. Thank you so much, Mr. Sharma, for joining us. Great as always to speak with you here on NDTV Profit. Now, last we spoke was, I would say, at the tail end of the festive season, and you had talked about how the initial few days was surprisingly positive in terms of demand. Now that you've had a chance and you know that's kind of behind us, can you give us a sense of how festive season actually turned out for you?
Yeah, good morning. You know, it's very difficult to read too much or to extrapolate what happens in a season. And it's very dangerous to read too much into what happens in those 36 days. Like you rightly said, actually the first half of the 36 days was slightly muted, but it was very exuberant in the second half. You know, so overall, I would say that it was a good festive season for Bajaj Auto. Our area of focus, as you know, is the upper half of the industry, which drove the industry, which grew faster than the lower half. And we grew, thanks to that, we had a great season. We recorded our highest ever festive volume of 270,000 Pulsars. And Pulsar is the main flagship brand of the company in targeting the upper half of the industry. Three-wheeler business also did exceedingly well. We had a record three-wheeler sales. Also, all-time high for Chetak, but that, for that the base is small, but be that as it may. So I would say that all the business units, the domestic motorcycles, the electric business, and the three-wheeler business had by the end of the season, had a very good season.
And do you see that? I mean, you started with that qualifier, Mr. Sharma. So do you see that now sort of, lowering, or do you see that petering out as we go forward? What's the sustainability of the kind of push that you've seen, and what do you think you're ending the year at? Because that overall question of auto demand, I'm just wondering if that's behind us or is very much there.
Well, like I said, it's dangerous to read too much into the exuberance of the final 15 days of the festive. You can imagine it's not right to extrapolate that. And frankly, we have to wait for the natural downturn which will be there post-season, because there is an advancement of sale. In India, particularly, it's very auspicious to buy. So people who want to even buy in November and December to some extent advance their sales into the festive. So there is, but what degree of advancement has taken place, etc., is very difficult to pin down. The right way to understand industry behavior is really by first week of December or middle of December, when all the registration data, the backlog, etc., is completed. Be that as it may, the 36 days going off very positively, and the first quarter and the second quarter being a tad lower than them. I think the industry is definitely hovering at about, motorcycle industry is hovering at about 8% growth, which is what we had sort of anticipated in the beginning. So we are very happy that it is meeting those expectations. So we would stick to that we see that kind of a growth number. And obviously, like I said before, this 8% is an average of the two halves, and the upper half would be higher than the 8% and would continue to drive the motorcycle industry.
So, Mr. Sharma, good morning, Neeraj here. The expectations of a flattish November are not out of whack. I hear you say that don't extrapolate. The expectations are that November might have been a flattish month for you on the two-wheeler side, not the three-wheeler, the two-wheeler side. That are not out of whack, right?
When you say flattish, I don't understand.
Month on month, November 24 over November 23.
It's an erroneous comparison. It's a flawed
because of the festive month.
See, this is a superfluous discussion, because Diwali last year was in November.
Fair call.
I don't understand what we are trying to drive out of that.
No, perfectly. So therefore, the 2 month combined, October, November combined, let's say, you think has not been a bad festive season this time around because of sentiment. Fair call. Okay.
Yes. That's the right way.
That's the right way to look at it.
Okay. Actually, because there is a significant Pitru Paksh involved also, which also So we actually internally also, we compare September, October, and November.
Fair call.
And November data you get by, let's say, first week of December. So that is the right way for us to, at least within the company, for us to understand what the industry behavior is.
Point well noted. Okay, Mr. Sharma, let's leave the festive season out completely. I'm just trying to understand now, how is business per se looking, sir? Because there is a lot of chalk and cheese opinion out there around the buyer sentiment. Split it into urban, rural, split it into whether it is modern tech gadget equipment versus non-gadget, split it into staples. But there's a lot of chalk and cheese opinion. I would want to understand, how do you feel about business as of now? Post-festive season, let's say going into the next 4 or 5 months, whatever little you can crystal ball gaze.
Yeah, sure. So that's what I was saying, that we started the year with an expectation of about 6 to 8% growth in the motorcycle industry. And it started off slowly in quarter 1, quarter 2, but picked up, and particularly picked up very well in the festive. I think the next few months, we should be looking at, for the industry, a growth of about 8% or so. Now, it could lie between 6 to 10%. So I'm saying about 8%, which according to us is a very healthy growth, particularly if you break down that growth between the higher end of the industry, which is the 125cc plus, which is going to be in double digits, and which is healthy because that's the where you get better revenue and better margin. So that's a very good sign. I think various factors, things like a reasonably stable economic backdrop, advancing penetration of retail finance, a reasonably okay monsoon, which is ensuring that the small town wheelers moving. All these things are combining to say. But of course, there are issues like the very bottom end of the market, whether there is enough economic inclusion to lift those people up into the consumption cycle. We are still seeing a little bit of softness over there. So we are seeing a much better performance in the middle part of the industry, which is sort of driving this 8% growth.
Right. Hi, Mr. Sharma. It's also Samina joining in. Exports has always been a critical driver for Bajaj Auto. What percentage of overall revenues do you expect from exports in FY25? And there are some geopolitical stresses, currency fluctuations in LATAM and Africa. How do you feel about that space? Where do we see that going in terms of contribution for the second half of FY25?
Well, our year-to-date growth in exports over same period, which is April to October, is about 9%. This is actually driven by LATAM and parts of ASEAN. Like I've been saying, that every month and every quarter is an improvement over the previous one, because the situation in Africa is improving. LATAM has been doing very well, so I'm not sure what you mean by geopolitical tensions in LATAM. We are not reading any of those tensions in LATAM. South Asia is also recovering, and ASEAN, particularly for us, Philippines is an important market. It has done very well. So when you put all this together, we are getting at about 9% growth. We feel that Q3 was better than Q2 by about 10%. We feel that Q4 should also be better than Q3 by about 10%. So step-by-step growth. Having said that, I would still say that even though Africa and countries like Nigeria, which is very, very big in Africa, have been showing month-on-month improvement, because of the macroeconomic conditions, the volatility in the currency, the situation remains fragile. And we have to see every month it goes. But we are very happy that for now about 6 months or so, or more than that, 6 to 8 months, we are seeing a step-by-step improvement even in Nigeria and therefore in Africa as well. And we are hoping that that continues. We have planned for that to continue. And we are obviously engaging with our channel partners with that hypothesis.
Planning to add any more geographies, Mr. Sharma, before I go into the conversation on EV?
A big thrust area for us is Brazil, where we have, which is, as a country, the third largest or the fourth largest country for market for motorcycles. We have launched, we commissioned our plant over there in July, which has unlocked a bit of supply chain. And that's an area of focus. As we speak, we are again making, we've got an initiative to expand capacity for 25 because we see a lot of traction for our brands and good demand over there. So that's one. We've also launched Bajaj in Spain and Portugal. We expect that to start to pick up March onwards because now there is the onset of winter. But we did an early winter launch just so that we put in the infrastructure, etc. over there. And so those are the few markets which we're quite excited about for the next few months now.
Sharma, just wanted to get your sense on if you have seen any impact on the possible hike of CNG prices. Policy moves have now ensured that you will see an increase in CNG prices. How do you see that impacting, especially your three-wheeler segment, or overall, do you see that impacting demand?
No, we don't, because the three-wheeler CNG, we have been in the market for more than a decade, and it goes through these ups and downs, and we find that with a lead and lag effect, the arbitrage between CNG and petrol comes back to that about 30% odd. Sometimes it increases because the petrol prices suddenly increase, and vice versa. But over the years, the demand is actually being driven by the expansion of the CNG network, which is the basic factor which has led to the penetration of three-wheeler CNG and almost the eclipse of the diesel and petrol-based three-wheelers. And now, there is a 70% odd coverage of the key towns. And we are told, just when we take the government plans, this is going to go up to 80-90%. So that is actually the key driver for CNG demand. The arbitrage swells and diminishes over time, but it still is much more profitable for a driver to take a CNG three-wheeler rather than a petrol or a diesel three-wheeler.
So fair enough. So one hike here and there is not going to make a big difference if you have such a huge part of the market. Just was wondering, I'm sure you've been seeing this closely, a couple of interesting EV launches in the two-wheeler category, announcements actually, and in the scooter category from others in this space. How do you view this at Bajaj Auto? I mean, one segment, of course, catering to gig workers, another very popular model now going EV. Do you see these as positives or competition heating up?
Oh, we see this whole thing as a positive, frankly speaking, because it is very difficult for one company to completely come and create a new market. So we've seen this, for example, in premium motorcycles, where the penetration of premium motorcycles is, when you benchmark it with even countries like Indonesia, etc., is much small. So when you get 2 or 3 good companies with good technologies, good products and brands entering the market, it stokes the market. And in automotive, there is nothing like products to stoke interest and build demand. So we have seen, for example, in Africa, the Chinese coming in and developing the motorcycle market in the early 10 or 15 years ago, and companies like us then profiting. So if you take a long shot view of these things, good responsible participants entering the industry with good products is very good. It's good for the development of the industry, because that it's not a straightforward case in EV. There remain amongst the late adopters and the late majority anxieties about various aspects of EV. So more and more vehicles on the road erode those anxieties, and it's good. But having said that, our own view is that the use cases in India are so diverse. Some people commute very long distances. Some people commute very short distances. Some people want to cut their fuel economy. Which means the implication on fuel systems for this is that there will be multiple fuel systems. We feel that there will be the gasoline-based fuel system. There is CNG now with our freedom. There will be electric, and soon to say there will be ethanol, which is backed heavily by the government. We are already seeing this in three-wheelers. For example, our three-wheeler dealership, if you walk into, today sells you a three-wheeler which is based on LPG, CNG, diesel, petrol, electric, and the 6th one, ethanol, is in the offing. So we don't think that it will be the victory of one fuel system over the other, but it is good to have a vibrant sort of arena over there, which helps build demand.
Mr. Sharma, just staying with the EV theme, if you can help us understand what has been the revenue contribution of the EV two-wheeler segment so far, and what are your expectations for growth in the next couple of years? And please correct me if I'm wrong, but what we understand is that there has been an increase in battery and component charges, or cost rather. So in cost, raw material, sort of cost inflation. How much margin pressure are you seeing in the EV segment, and how are you looking to negate that?
First of all, we are not seeing cost inflation on the battery and cell side, the kind of the point which you are making. Quite to the contrary, through sourcing and supply chain development, product development, we are actually seeing better margins in our EV segment as we go forth. So that's slightly different. The EV two-wheelers has been growing at about 36%, between 30 and 40%. And I think there is enough now interest and traction, and there's enough sort of enough customers out there to maintain that kind of a growth of about 30% going forward. So that's what we are sort of going to be basing our own plans on.
It was actually a brokerage report that pointed out the cost inflation on the battery side, but good to hear that the industry is not facing that.
I didn't say about the industry. I said
that's what I said.
I can't say about the industry,
an aberration,
but I can say
so that's a good thing. Good to know. Yeah. Just one last one on the EV segment. What is the timeline for achieving break-even here?
Sorry?
When would you achieve break-even in the EV segment? I mean, I guess...
we are already breaking even in our EV portfolio.
Okay.
Our EV portfolio today constitutes, in revenue terms, I think over 25% of Bajaj Auto. In fact, our green portfolio, as we call it, which is EV and CNG put together, constitutes over 45% of our domestic revenue.
All right. Great speaking with you, Mr. Sharma, and thank you so much for all your time and taking all of our questions. We hope to chat with you again soon. Rakesh Sharma, Executive Director of Bajaj Auto stock up in the green. But a quick check on markets before we get to our next conversation that we are looking at today. And you have seen a bit of recovery. Nice to see a spot of green on the Nifty as well. Adani stocks in focus actually. Your big gainers over there. Adani Green has hit the 10% circuit for a second session in a row. So that's why you're seeing some action. Life insurance companies in focus as well. And HUL has, I just want to pull up the HUL stock because I thought this was interesting. On their capital market day, they have said they are focusing on premiumizations. They have said that margins will moderate due to a favorable mix and turnover leverage. Volume growth of 100 basis points is what they're looking at. The HUL stock also in the positive.
Yep, and one of the big things to focus on. By the way, the new listing or the new kid on the block will list in about 9 minutes from now, listing at a significant premium to its IPO price. No surprise out there. But the point being, is the Indian consumer seeing some of this optimism in the markets? And is it translating into sales in a very busy wedding season as well as an upcoming holiday season? Akash Agarwal, whole-time director at V2 Retail with us on the show. Akash, good having you. Thanks so much for taking the time out and joining us. How do you characterize sales, not just for the festive month of October, but even post that? Has the traction stayed on, or has it been, is it difficult to call that?
Yeah, hi, thanks for having me. So in Q2, we grew by almost 64%, and we were expecting a very strong festival quarter because of festive and winter demand. And October, in fact, was the best quarter in the history of the company for us, both in terms of sales and in terms of per square feet sales. So we have seen very good demand, and it was actually better than expected. We saw a high double-digit SSSG. And it has been continuing into November because of, now winter's here and the temperatures are dropping. So, and because of weddings. So we've seen a lot of uptake in the occasion wear sales as well. So yes, I would say the festive demand overall has been very, very positive.
Just to lay it out, you mentioned that there was a strong number in the month of October, and that is continued in the month of November. So October festive demand was very strong. That's continued thus far, and therefore places you almost a high probability of having a very strong Q3 as well.
Yes. So we expect to grow by at least 40 to 50% in revenues, and also establish a double-digit SSSG in Q3 as well as in the coming quarters.
So consumer sentiment is strong. It's not taking a dip. Or Akash, would you attribute this to the pockets that you are present in and the goods that you are selling? I'm trying to see if this extrapolates into other categories and other formats as well, or is this specific to a North India retailer wherein because the weather is also now turning cold, then apparel sales of that kind also sells? How would you characterize it?
So we have seen growth across all regions and across all categories. But I would say this is more pertinent to value fashion because, customers are getting more value conscious. And when they see more value being given by, other fashion retailers, maybe there's a movement happening from an upper tier to a lower tier. That is why we are seeing this kind of demand. But when you see the reports of different FMCG companies and car companies, yes, they show a certain, rural and urban slowdown. But, gladly, we haven't seen any of that sort in our business. But I think it's also because of the value proposition that we offer to them. And, being a fashion retailer with only a 55% markup, that plays into our strengths.
Akash, hi, it's also Samina joining in. I want to talk to you about your current store network and what you're building out as well on the e-commerce space. With the upcoming e-commerce launch, what revenue contribution are you anticipating from this vertical? What we want to gauge is, given the nature or the type of customers that you attract, would e-commerce be a good play, and how would the cost-benefit analysis work there, and where do you see that sort of contributing in the next couple of years?
So we have changed our e-commerce approach. Instead of having a centrally distributed e-commerce, what we are focusing on is omni-channel, where we will leverage the existing inventory at our stores so that significantly reduces the logistics and return costs. So we are just providing e-commerce as an additional channel to our existing customer base. So we have an existing customer base of more than 2 crore customers. So we don't expect e-commerce to be a very significant part contribution to revenue. It should be around to start with 1 or 2%, and moving ahead in couple of years, it should move up to 3 to 5%.
Akash, I just want to talk about inventories and the full price sales. Full price sales have accounted for 91% of your total sales in the first half of FY25. How are you managing inventory to maintain this sort of a number that you're pulling out? Any challenges that you're foreseeing, or your costs have gone up as we go into the second half, taking a cue from what you saw in the first half?
So the 91% full price sales is a testament to the efficiency of the merchandising department. So the kind of forecast that we do, the kind of data analytics that we do, and we leverage that data in, planning our next assortment season. So in terms of colors, in terms of fits, in terms of fabrics, so that has really helped us increase the full price sale from almost 80% to 91, 92%. And going forward, our target is to have it more than 90. So that gives us an edge in terms of we are passing on maximum benefit to the consumer, and we believe in true pricing instead of hiking the price up first and then putting on discount.
Your prices have been gradually moving up, right, from what I understand?
So we have changed the product mix. We have reduced the space allocation that we give to general merchandise, and we have increased the space of apparel, which is our strength. That is why there has been an ASP increase. We also removed a lot of entry price points where we couldn't give a certain standard of quality. So we have removed all the substandard quality products in terms of fabric from our stores. So that has slightly also increased the ASPs.
Just one quick last question from my end. Revenue per square foot has increased, and I believe you put out a target of 1,200 rupees per square foot going ahead. When can we expect you to achieve that? And also on operating margins, slight dip is what we saw. You want to give me a sense of what the outlook on margins is going ahead? Because I'm guessing this is more of a revenue business as opposed to focusing on profitability or bottom line.
Yes, so about 2 years back, the revenue per store per month was about 68 lakhs. In 2 years, this year we'll achieve more than 1 crore per store per month, and we plan to reach 1.2 crores. That is about 1,200 rupees per square feet per month in 18 to 24 months. So even if we grow at a 9 to 10% SSSG for the next 2 years, we will reach that number. And in terms of operating margins, so we always talk about pre-Ind AS EBITDA margins. So in pre-Ind AS EBITDA margins, last year it was around 6%. This year, again, we are targeting 6 to 7%. But as we move towards that 1,200 number, the EBITDA margin pre-Ind AS should move to 9 to 10%.
Okay. Well, Akash, congrats for the stupendous growth. Just 10 seconds. What is the year-end, what is the FY25 growth number? Sorry, very quickly, 20 seconds. Akash?
So we closed last year at 1,150 crores, and this year the target is 1,800 crores.
Wow. Okay. Well, wish you all the best for that and wish for that growth to continue, Akash. Keep up the good work. Thanks so much for talking to us today.
Thank you.
That's a very confident V2 retail of nearly a 50% growth target. And they've done that. They walked the talk thus far. Let's see if that continues. By the way, Samina, new listing and some stupendous numbers, very likely, if the discovered price is anything to go by.
It's an exciting one. 200 plus is what the listing price is expected at. Remember, this is a very interesting business. And also the good news is 93% of the equity still remains with the promoters of the company. And you can see those very happy, smiley faces as the company Enviro Infra engineers list. Ooh, 224. This is even better than the most optimistic expectation number that was put out. The grey market premium was indicating to start in the range of 200 to 205, but very clearly they've got an even better response from the street. 54% on a day when the broader markets are looking very, very quiet. So the buying is coming in as we see it. You know, when Neeraj and me discussed the fact that would one exit this for listing gains? Probably unlikely. So it seems like it's a great story. And if you want to play the water and water waste management theme, this one is a rare find or a rare gem in that sense. Very well priced, valuations are attractive, order book is extremely healthy, financials are stable. There is nothing wrong from the look of it, Neeraj. Well diversified portfolio, and they've also got a reputation of delivering very large projects in stipulated timelines.
Yeah, clearly seem to have done some right things, and which is why it's showing in the way the stock is reacting. 56% on open. Let's see where it goes. Okay, we need to slip into a very quick break on that listing note. Come back and talk about the new FNO entrants and how are they doing, as well as have a conversation with a very special guest, Prateek Agarwal of Motilal Oswal AMC joins in.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society for everyone who views them.
The NDTV Indian of the Year is an extremely important initiative.
Nominees were just extraordinary.
Each one of them is a rock star.
And the achievers in this field who are inspiration for the Indians in this country have been chosen for this prestigious award.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable.
Hello and welcome. You're watching the Small and Mid Cap Show. I am Agam Akil, and in this show, we take you through, conversations with managements on their outlook going forward. But before we bring in our first conversation around Gulf oil, I'm going to take a very quick look at the markets and how they're faring. So a trend of sorts. Today as well, we have substantial gains in the Adani Group companies, with the Nifty 50 itself advanced by around 1%. So we do have a little bit of recovery playing out after yesterday's day of trade. But we all know that to a certain extent, a lot of the weakness yesterday was attributed to expiration and the volatility induced by that. Today, we have Reliance Industries, Bharti Airtel, and L&T along with ICICI Bank providing the bulk of gains as far as the up move is concerned on the Nifty 50. And of course, even in terms of the broader markets, it is going to be another day of trade where we have seen advances. The mid cap and the small cap indices specifically, so the mid cap index up around, marginally higher. And let's bring up the small cap index as well and see what's it's doing. That's also advancing, but it does seem like there's outperformance for the Nifty 50 in today's day of trade, along with the Sensex. Today, of course, is also the Sensex weekly options expiry, so we should be keeping that in mind as well. But this is as far as markets are concerned. Let's get on with our management conversations. And right at the top, we have with us Manish Gangwal. He's the Chief Financial Officer of at Gulf Oil Lubricants India, who joins us on the show. Manish, good afternoon, and thank you so much for joining in. I want to start by asking about the company making significant acquisitions in the EV-related businesses, and I want your view and your way forward as to how things could potentially pan out for the business is in this area specifically.
Yeah, good morning. Thanks for having me on your show. Basically, as a lubricant company, we are primarily a lubricant company, and we have been, servicing our entire range of automotive and industrial lubricants for last many decades in India. But as EVs started becoming sort of talk of the town, and more people will be looking at EV as an option going forward. While we believe that lubricants market is going to continue to grow in India for many decades still, but we as a company, wanted to look into the EV value chain and where we can play as our role in the EV value chain. And what we figured out was that we have a very strong brand which is known to the automotive consumers. Today there may be an ICE vehicle consumer, tomorrow there may be an EV consumers or EV buyers. How to remain relevant to those consumers, those buyers. At the same time, we have a very strong connect with OEMs who are doing currently, let's say, ICE vehicles, and tomorrow they may venture into some sort of EV models they may bring out. So how to use those strengths and our distribution network. With that thought process, we started looking at the sector, And
don't get carried away by what other people are doing.
Don't say that.
But, jokes apart, I think it's very important to stay disciplined and not get carried away that this is what everyone's doing, this is what's sounding really cool, easy money. I mean, how many direct equity investors do you talk to who will tell you about only their success stories? And rest assured, having met many of them in my career, I would say for every success, there would be at least 2 stocks that they've lost tremendous amounts of money on, which they're not really talking about.
And so it balances out.
So eventually, it's like 1 step forward and 2 steps back. And when you're trying to create a long-term wealth journey, that can be pretty counterproductive. So just consuming risk in the hope that it plays out, again, I would say can be extremely counterproductive to this 1 crore journey for sure.
A significant milestone, of course, is that 1 crore mark.
Yes, absolutely.
Thank you so much for joining in and for speaking to us on MoneyWise. And, well, here's my wish to you. I hope that you accumulate this 1 crore very quickly and you have the option of sipping coconut juice or kawa in the hills, whatever you like, earlier than maybe some other people in years gone by have achieved to do. Thanks so much for watching. Do stay tuned. This is NDTV Profit.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At
Welcome back. You're watching India Market Close, and it's looking like a happy Friday. What a turnaround, really. Look at the heat map for the Nifty, which is now 1% up. I mean, 24,000 crossed and sitting. This morning we were wondering whether we would hold on to the 23,900 mark. So it's been a good day. Let's just pull up the intraday chart for the Nifty to give you a sense of what that move has been looking like. The bank Nifty also not half bad, about 1/4 of percent point up. But yeah, close to the day's high even now as we see. We'll pull up the heat map very quickly as we see what is really powering and most stocks in the green. I'll start with the losing side. SBI Life, HDFC Life, insurance play in focus for a variety of reasons. Both of these companies came out yesterday, last evening, and said that they are clarifying that any possible move by the regulator of insurance companies, the IRDAI, to cap the amount of insurance policies their parents bank can sell will be done only after a lot of consultation. Having said that, the sense that there is an intent to do this has brought the stocks down as well. Hero Motor feeling the heat. Remember, we have reported just a few minutes ago that SFIO has been raiding Hero in Gurgaon. On the winning side, Bharti really racing today, 4.5% up. Some pharma plays, and we talked to you about this on the morning show as well today. Cipla, Sun Pharma really roaring. M&M recovering as well. Remember, another company that had clarified that they have not received a 7,200 crore notice. We talked to you about it this morning. M&M about 2.5% up. Big boy Reliance really helping along. We should pull up the contributors, the Nifty contributors, just to give you a sense where that strength is coming from. And Bharti is the big one, contributing almost 42 points, followed by Reliance, ICICI Bank and L&T. So those are the top four. On the losing side, HDFC Bank seeing a bit of pain. But Neeraj, even though the indices look good, I mean, the question really is whether the broader markets are following and whether advanced decline ratios and other indices are following through.
Yeah, I mean, it remains a key question for sure. And just look at what's happening to any of those broader end of the spectrum stocks. Actually, let's just get the heat map up on the screen for a moment, or the advanced decline ratio for a moment. And then we'll get to tracking the move of some of these stocks. But the market breadth first on your screen. And you will see, quite unlike yesterday, there's a yawning gap, but in the positive. So the market breadth has looked very, very strong in the session today. Just very quickly, a few stocks that you should watch out for. And just tracking the moves of some of the winners. So if you look at Adani Green, for example, or Adani Energy Solutions, as the case may be, some good moves there today. But if you look at the 3-month, 6-month, 9-month chart, well, the stocks may have been a bit languishing. But Piramal Pharma is the other one, which has actually had a really good move today, and that supplements the kind of move that the stock has had the last few. The losers, unfortunately, CreditAccess Grameen, down 8% today, key loser, and has been that way throughout the last 12 months. Similarly for a Poonawalla FinCorp, 10% down over 3 months, over 6 months, 21% down. And Trinity Turbine, after having a really good move though, is correcting. So no patterns out there, but select stocks, particularly the financials, have looked very, very wobbly in trade. The winners for today, I mean, just one last mention of the BSE 500 winners and losers before we get to G. Chokalingam of Economics Research. The Adani Group stocks, there is Piramal Pharma, there is Lloyds Metal, Hudco, Praj and LIC, which is the new kid on the block, if you will, on the FNO side. On the losing side, aside of CreditAccess Grameen and Poonawalla FinCorp, which we discussed, KPIT Tech stands out, as does Colgate, which is taking a bit of a breather after a really good rally in the recent past. G. Chokalingam with us. Mr. Chokalingam, good having you. Thanks so much for taking the time out and being with us on the show today. The MFI space, and we talked about CreditAccess Grameen, has had a really sharp pullback today. A lot of stocks are cracking, particularly CreditAccess. Are you negative for somebody having those stocks in the portfolio? Is it better to get out even now?
We have been negative on these kind of finance companies for simple reason that the competition has intensified and multi-layer of competition has come in the finance services field, particularly lending side. And secondly, the whole industry, including bank and NBFC, all put together, there has been a considerable slowdown in the credit growth also. And even in the listing space, the competition has increased to attract the investors to invest in such companies. So therefore, I have been negative. I continue to be negative. Of course, they are all beaten down very badly. To get out, one can wait and see whenever there is some, technical bounce or some tactical recovery. That opportunity can be used to exit. And I am of the firm view that opportunities are plenty outside these finance companies.
Okay, so obviously CreditAccess, Grameen, having a tough day as was expected after a double downgrade from Goldman Sachs. But we've kept the focus on Adani stocks. They've been surging for the past 2 days of trade. A lot of positive news which has come in for the last 24 hours or so has also fueled it. And Agam is joining us for more details on this.
So we have a whole host of institutions and entities across the globe coming in support of the Adani Group companies, especially following and in the wake of the group releasing that statement suggesting that the key members in there, Gautam Adani, Sagar Adani, as well as Vineet Jain, have not been implicated when it comes to certain charges with the FCPA. And on account of that, we have more and more good news coming in. I'm going to start off with Kerala, right at home, where they have in fact signed a supplementary concession agreement with the group when it comes to the Adani Verinium Seaport. And this actually paves way for, well, earlier than expected when it comes to revenue gains from the Verinium Seaport. Of course, the port will be fully operational by 2028, but it's not just Kerala. Moving on to, well, the former Andhra CM, Jagan Reddy, who has also refuted claims with respect to bribery and the Adani Group, and in fact has also suggested that he may look to sue for as much as 100 crores when it comes to media companies reporting these incorrect, allegations. Moving on, we also have a lot of updates coming in from Africa. Tanzania has in fact extended its support. Back in May of 2024, the Tanzania government had signed an agreement with the Adani Group company. This was to operate one terminal in Dar es Salaam, and well, Tanzania is suggesting that there's no change in that agreement. Neither has there been any change with agreement when it comes to the Sri Lanka Port Authority, where once again the chairman has said that they're not looking to cancel any of these terms of agreement. Well, moving on, we also know that Abu Dhabi's IHC is unworried about the outlook of the Adani companies, and they haven't made any changes with respect to their investments in the Adani Group companies. But even later on today, we had an update from CRISIL where they have in fact reaffirmed their positive outlook, and they cite strength of the group's financial and business profile. And they also say that allegations haven't led to any negative actions from lenders or investors. And in the latest, we also have a whole host of Japanese banks lending support to the Adani Group company, where in fact someone like Mizuho Financial Group has suggested that the charges will not have any long-term implications, and there are no plans to pull back when it comes to Sumitomo Mitsui or Mitsubishi UFG Financials. So all in all, a lot of entities from across the globe coming in support of the Adani Group companies.
All right, thank you so much for that, Agam. Kunal Shah joining us. He is Senior Technical and Derivative Analyst at LKP Securities. Kunal, very good afternoon to you. Let's start with your take on the indices. Showing some kind of a pullback. Question, of course, of whether this continues into next week. What would be your position?
Good afternoon, Tamanna. Definitely, we have seen the volatility move in yesterday's in the Nifty index because of the expiry. So the undertone continues to remain bullish. We are bullish on the index. We feel that Nifty will go towards the mark of 24,700 in the very short term. So it's a buy approach. 23,900, 800 is a very strong support zone. So I think that support zone will not be breached. And eventually we are expecting 24,700 on the upside. So it's a buy even at the current levels. And even if you get any dips on the downside, that should be utilized to buy the index. Coming back to Bank Nifty over here, Bank Nifty, yes, it has been consolidating in a broad range. Bank Nifty still needs to have trigger on the upside. So that might continue to consolidate. Nifty might continue to outperform on the higher end. So we are bullish on Nifty, be aggressive. Bank Nifty, wait for a breakout above 52,200. Once that is taken out, then one can initiate long positions.
Okay. And what would be your stocks on your radar this afternoon, Kunal?
So I think two stocks here I would like to highlight. First is LIC Housing Finance. Again, the setup is very good. The stock has been making higher low formations on the daily chart, has been in the oversold territory, and now witnessing a bounce from the lower levels. So that is a buy from the current levels, keeping a stop loss of 630, looking for targets of 645 to 651 on the upside. So LIC Housing Finance is the first pick. Second stock, which I like over here from the current levels on the stock perspective, where we have seen the broader markets being participative. Pharma as an index has been doing quite well. So Zydus Life is showing early signs of bottoming out. So here the bottom has been made. The stock has been a big underperformer in the recent times, and now we can see a good pullback rally on the higher end. So Zydus Life is a buy at the current levels. 940 is the stop loss. 1000 and 1030 are the targets on the upside.
Okay. Well, and thanks for that, Kunal. Speaking of pharma, that space is, well, you could argue is on a bit of a roll. The CDMO companies in particular are the focus of attention. Divi's Lab is gaining after Citi's buy number from buy report, but more than just the target, I think it's the nature of the commentary which is very interesting. My colleague Varsha looks at this space very closely. Varsha, tell us what Citi is saying and what's happening in this space, independent of what Citi is saying, because there's a bit of traction out there for the CDMO players.
Yes, Neeraj. So one of the reasons why Divi's is actually buzzing today is because of the Divi's being the contributor when it comes to US Biosecure Act. So Divi's will be one of the companies which will gain a lot when it comes to US Biosecure Act, because Divi's is already into custom synthesis business, which so Divi's make API for innovator companies, which forms almost 50% to their overall sales. But I want to highlight why Citi has given buy rating to Divi's. So one of the reason is, so the note actually gives a whole perspective of one of the drugs called Entresto. So Divi's make API for this hard drug Entresto, which is made by the innovator company called Novartis. Now, US court decision to stay for approval of the generic version of this hard drug has brought relief for the Divi's Lab, because the potential generic launch of this product could have intensified competition affecting sales for this API for the Divi's. Now, Divi's CDMO, if you see, so this drug actually forms 8% of the total sales for Divi's when it comes to FY24 and forms 19% of the overall CDMO sales that Divi's does for FY24. Now, the second, so Citi feels that this Entresto API drug could actually increase for Divi's rather than street expectation of a decline. So one good thing for that. The second reason that Citi has given a buy rating is contrast media pipeline. So Divi's is close to launching 2 contrast media products. Now contrast media is nothing but which is used in your image. So radiologists use contrast media for better pictures. Now 4 more products are actually in early stage of commercialization, showing strong future potential for Divi's. Now, the third reason why Divi's has been given a buy rate is the US Biosecure Act, which we have already spoke about. But the interesting thing, according to me, Neeraj, here is, one is their custom synthesis business, which Divi's is actually seeing rise in the inquiries that Divi's has been getting. And this quarter, in Q2, we saw a good growth when it comes to custom synthesis business, which forms almost 50% for Divi's. The number 2 reason why I feel Divi's can have a good growth is robust pipeline when it comes to generic products. So there's a $20 billion opportunity when it comes to Divi's for generic products, which will start contributing from FY26 on the back of patent expiry that Divi's is expecting.
Okay, so that's the Citi view on Divi's Lab. I mean, we've covered pharma, but quick and good to revisit a stock and a sector which is completely roaring. It's not just Divi's. Look at Cipla, look at Sun, the entire space doing pretty well today. Choka, do you see anything exciting here that you'd pick up and this momentum continuing?
Momentum may continue because, as all of us know, Mr. Trump has not included in India in any of his protectionism policies. So, which is very favorable to pharma, because India depends heavily on US for 2 major sectors. One of them is a pharma, apart from IT. The second, the rupee has been depreciating, and FIs have been selling, and they may continue to sell in the short term, which could weaken rupee further. That is also positive. And third, any adverse development against the imports from China would also favor Indian pharmaceutical industry in terms of exports. So therefore, I believe the current momentum may continue in the pharma stocks.
And Kunal, take on Divi's, Cipla, Sun. What is your favorite in this space, and Divi's specifically?
I think firstly we'll talk about Divi's here. I think on the technical charts, it has been consolidating in a broad range. In the weaker market, a stock consolidating is a good sign, and now it is showing signs of fresh breakouts on the technical chart. So clearly a bullish bias from the current levels. We can see for the short term the stock going up to the levels of 6,400, 450 in a very short term. So these is the buy for me at the current levels. And even Cipla, that is something which is looking interesting at the current levels. We have already seen a good amount of correction from the higher levels. Now the stock has broken out for the previous 7-week high with trading volumes, as well as the stock has surpasses 20 DMA as well. So clear cut a buy signal from the current levels for Cipla as well. I think it can easily go up to 1580, 1600 levels in the short term.
Okay, well, certainly active, some of these pharma names in trade today. The other one which is very active today, Kunal, is Airtel. And that stock is up about 4%. As the Nifty, by the way, roars higher to 1.12%. Look at Airtel, 4.5% higher. And the points contribution shows that telcos probably have it in them. I reckon that the move in Reliance might also be linked to that maybe. I doubt oil and gas has anything. So Kunal, but Airtel is the name that I wanted your view on. Big roaring move today. From Airtel's parlance, 4.5% is indeed roaring. What's your view here?
Yeah, I think exactly from the current levels, what I see on the technical chart, that the corrective decline has been completed for Bharti Airtel. Now it is ready to test its all-time high level as well. So I'll not be surprised that the stock is going to surpass its recent high what it made. The recent high was made at around 1779. So I'm expecting even that level to be touched and breach on the higher level. So 1630 is where it is trading. The support on the downside is now placed at 1560, 1570 zone. So till the time these levels are not breached decisively, the view remains bullish. You can keep two targets. First will be 1690 on the upside, and second will be 1750 or 1770 on the upside.
Okay, it's a day of NDTV Profit exclusives. Frankly, I mean, it's raining exclusives today on NDTV Profit. And to talk about another big one coming in, the Finance Ministry has received the Oil Ministry's request on scrapping windfall tax. My colleague Shrimi Chaudhary joins in with more details. Yes, Shrimi.
So what we are picking up from the top sources in Finance Ministry is that, they have received this request from Petroleum Ministry on scrapping the windfall taxes, which has been levied on export of petrol, diesel and aviation turbine fuel. So what is happening here is that Finance Ministry said that we are evaluating the request, because the global crude prices is being stable for some time. But there is no decision has been taken yet on the idea. In fact, they are also contemplating whether to keep a provision, in a way that it should be zero and not scrapping it fully. There are also talks on, whether to bring natural gas under the ambit of, GST. What the sources is also telling us is that the Petroleum Ministry also pitching to, make this inclusion in the GST purview, which they are also, looking at, and it may be the part of GST Council meeting agenda, which is slated for, December 21st. Remember, when the GST was introduced, it was explicitly, mentioned in the regime that GST Council shall recommend the date on which the GST shall be levied on the petroleum, crude or high-speed diesel, motor, spirit, etc. But any call needs to be taken by GST Council as far as, the date of taxation is concerned. So we are getting hint that it could be the part of the upcoming GST Council agenda as far as, bringing these petroleum products in the GST ambit. On the windfall tax, they are still evaluating and no decision has been taken yet.
Okay. Thank you so much for that, Shrimi. And, it makes sense because the question is that are these companies going to see?
You actually saw some uptick in the oil exploration company, that's Reliance and ONGC, intraday high of over 2%. Now, the potential scrapping of windfall taxes is positive for these companies because it means higher revenue realizations. So what windfall taxes basically are, they are a type of taxation that is imposed by the government that limits the revenues that oil companies can get by selling a barrel of oil during periods of high oil prices. Currently, the value is zero. But when prices prices, it gets triggered around when prices sustain higher the $75 per barrel mark, and Windfall, the scrapping of this would thereby increase their realizations even if the crude prices do go above $75 per barrel. The second point that Shrimi talked about is inclusion of natural gas under the GST regime. It's been a talking point for a long time now. We've seen we've seen gas companies gaining in trade today. Adani Total Gas are intraday high of 7.2%. Gujarat State Petronet intraday high of almost 2%. GAIL India and Gujarat Gas also seeing an uptick of over 1%. Now, when you talk about what the benefits for the gas companies are, well, it benefits the entire gas value chain from lower tax rates. Morgan Stanley says that the key upside is faster adoption of gas, and they expect Gujarat Gas to benefit from volume upside. It could also lead to higher gas consumptions and lower import costs for LNG, which would benefit companies like GAIL India and Petronet LNG. And lastly, Morgan Stanley, in their note, they had also stated that oil exploration and production companies could also be the biggest beneficiaries. And like I mentioned in the start, ONGC and Reliance Industries are also up in trade today.
Okay, thank you so much for that, Shrimi and Mihika, Kunal Shah and G. Chokalingam with us. I'm just wondering, Choka, how are you looking at the whole oil and gas pack? Because so many things in play here. Frankly, crude prices have not moved too much despite wars raging on. OPEC Plus has even postponed its production schedule meet to December 5th. But is there anything that you want to look at very closely? A BPCL, for example, has been a favored play. So has HPCL. How do you see an ONGC?
Oil marketing companies, the performance is extremely volatile, very difficult to predict. You have seen it in some of these refinery companies for September quarter. As far as upstream companies, as far as the oil producers are concerned, I'm not overly bullish on that particular theme because despite you having war in Ukraine for more than 2 years, oil price is still down about 20% from 52-week high. And again, though there is a lot of disturbance in the Middle East, the oil price has not gone nowhere. Even on a monthly basis, it's almost down 12-15% from a 1 month high. So my point is that if this ceasefire is successful, definitely there is a possibility of oil price falling very badly, which will favor Indian economy and markets, but it may not favor oil producers. So therefore, I would not play oil as a theme.
Okay. Kunal, on the charts, any of the pack that you like?
Yeah, I think if you look at over here, I think GAIL is something which is looking positive to me. At the current levels, we can at least see a decent pullback towards the 200 DMA. So I can expect levels of 210 on the upside.
All right. We'll take a very quick break at this point, but before we go into the break, an NDTV exclusive from protests by pilots and cabin crew to furious complaints about poor staff behavior. Air India has struggled with one controversy after another since the Tatas took over the airline. My colleague Vishnu Shom caught up with Campbell Wilson, the CEO and MD of Air India, and began by asking him about how he tackled these issues. Listen in to a slice of that conversation.
Put it in context, there's 30,000 employees in the new Air India group. There were actually 5 groups of employees because the Indian Airlines Air India merger was never fully consummated. And so we had to bring all of this together. Now, in the global context, airline mergers can take 5 to 7 years. This has been done in a little over 2. And when you bring different employee groups, different terms and conditions together, you don't pick the best of everything, but neither do you pick the worst. And so there is a mix of pluses and minuses. Now, if you look at individual elements, some people can say this is better, some people can say this is worse, but on balance, I'm absolutely convinced that it is better. Right. For each individual group. And I think more so, the opportunity available to people is much, much greater than it was ever before, simply by virtue of the fact that we've got so many aircraft, there is such ambition to grow, there's such ambition to improve the product, that the opportunity for personal and career development is unparalleled.
Yeah. And yet there are problems which suddenly emerge. There is social media, which I know has been a bit of a nightmare for all airlines. When you've got, for example, flight crew complaining or cabin crew complaining and saying, look, this is a broken aircraft. There's been some Facebook posts of late, and that is deeply problematic. And look, they aren't serving even a proper glass of water. You're a forward-facing industry and a public-facing one at that. When you have challenges like that from your own staff, does it not represent a huge challenge?
Well, I mean, clearly, our cabin crew, our staff, want to operate a product that they are proud of, that allows them to provide the service that they want to provide. And it's fair to say that particularly the legacy aircraft that we inherited were not up to that standard. And it just takes a long time. We committed $400 million to buy the seats, to refurbish those aircraft. The seats have been in the certification and manufacturing process since then. They will start to be installed on the wide-body aircraft next year. About a third of the narrow-body fleet are already done. But it will take a while to bring the legacy aircraft up to that standard.
Becoming a member of jury of NDTV was a totally different challenge altogether.
When you recognize contribution to society, these stories are inspiration.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators.
All right, back with India Market Close right here on NDTV Profit. Let's talk about some small cap winners or small cap volume buzzers effectively. They could be winning or losing. Anushi Johnson with a list of some of these and why they could be moving in trade. Anushi, good afternoon.
Hi Neeraj. So most of the winners that we are looking in the small cap buzzer space as we speak. First one on the list is Easy Trip Planners, 16.4% of gains. That is the intraday high that we've looked at for this counter with about 8.5 times of volumes. Now what essentially could be one of the triggers is, one is the Nirmala Sitharaman, the Narendra Modi government has approved 40 projects under the Special Assistant to State, and this includes investment of about 3,200 crore to develop iconic tourist centers across 23 states. But what the company has done earlier also, let's just get that in perspective. It was in pact with BNG Green to promote eco-friendly travel and to integrate BNG's green APIs into company's booking platform. Second, if you look at it, is Z Entertainment, 5% of gains that we are looking at with along with 4.5 times the volumes. This is after Puneet Goenka fails to get shareholders not to be reappointed as the director of the company. 50.4% of votes were against this reappointment. To note that Goenka currently is the CEO of Z Limited. Third one on the list is Praj Industries, 6.8% of gains with volumes of over 4 times compared to the 30-day average. If we do see the trajectory of the stock in the last month, we are looking at some strong gains, 20% of gains that we are looked at. This is especially after companies' plans to triple its revenues by about 2030 and aiming for a 10,000 crore of revenues by FY30 compared to the current revenues of FY30. Along with that, the export mix also they plan to increase to 50% as compared to 29%. And the last one on the list is Jubilant Ingrevia, another stock that has seen some decent returns in this last 1 month period. While currently it is 5% up in today's trade with about 4 times of volumes, it has seen around 12% of gains in this last 1 month. So these are the list of stocks that are buzzing in volumes today.
All right, thank you for that, Anushi. Quite a few buzzers over there. Kunal, any of these that you're tracking? I want to ask you about Easy Trip specifically. Easy Trip is one of those stocks that moves a lot on news flow, no particular news flow today. But if you have a holding on this, is this a time to exit or shore up even further?
I think the stock has declared a bonus and I don't have the updated charts right now. So I won't be able to update on it, but just a holistic view I would like to give. The stock has been quite volatile in the recent times. On the lower end, what I see is the level of 15, 16 on the downside, which has been acting as a major support for the stock. So at least from the current levels, the risk to reward ratio is favorable for trading perspective. We can expect the stock to go towards the levels of 2021 in the short.
They have the stock now trades X bonus 1:1, and which is why you are seeing that kind of move in it. Just on the entire space, Choka, any view on Easy Trip specifically as a counter and on that space as we're going into the December season? Will travel, leisure, hospitality become a focus for you, and of course the whole wedding season?
Yeah, you are absolutely right. So some momentum can be there in the business, and therefore in the stock price also. So therefore, the investors can continue to hold Easy Trip.
Ashoka Buildcon, there was a flash. Ashoka Buildcon, I think, amongst all the order wins that they've gotten, there's one more order win that came in. I think the stock has just shown a bit of a spike there. So good 3% uptake for that one as well in trade. I wonder if any of these infrastructure names stand out for you, Mr. Chokalingam. Are you buying anything?
Not stock like Ashoka Buildcon. We have a buy call on L&T. Of course, in the mid cap, one can consider JSW Infra. And in a very small cap, we have a buy call on Vindhya Delhi, which is into EPC projects for telecom and water. Particularly for water projects, it is present in UP. Recently, it had an order also from the UP government. These are the stocks we are quite optimistic.
Water, wonder what the new listing is doing as of now. It's into water management plants construction, and 40% is strong. It's not as strong as how it started off, which is about 50-55%, but still a 40% uptick is not bad. And just before I go to my colleague Shubhana, just a couple of other stocks. IG Petro has spiked in trade, so do keep an eye out for that. We were talking about pharmaceuticals. Concord Bio has had a bit of a spike in trade, so do watch out for that too. And Stuffcraft is up in trade. Concord Bio up 4%, but look at that spike. Stuffcraft is up. IG Petro is quite stunning, really, the kind of up move that has happened there. Very strong for that one. Then when I look at that stock spike there, 16.5% and on very strong volumes.
Yeah, so IG Petro want to mark today. For sure, some others which are catching my eye, LIC is one of them. Honasa is the other. I mean, can't see a clear reason for Honasa spike except for maybe now after a whole, I think, couple of weeks of the stock being sold, maybe there's some recovery there. But are you seeing, let me ask Choka this, are you seeing a premise for this Honasa spot?
Honasa I haven't tracked, okay. Therefore I'm not able to give my view.
Okay. Kunal, are you looking at it?
Yes, recently we have seen that post listing, the stock witnessed some rally, but now it has been trading below its listing gains as well. So clearly we have seen a good amount of sell-off from the higher levels. I think pullbacks again is what we are getting in the stock on the technical charts. Pullbacks could be an opportunity to exit. I can see again the stock coming down towards the levels of 240 on the downside.
Okay. Let's take a look at a UBS Securities note today that has warned of loan defaults by microfinance borrowers have risen in October. So now, add to some of the bad news for CreditAccess, Grameen. Look at a Poonawalla Fin as well. Look at the stock price here. Maybe that's one of the reasons you're seeing that pain point. Shubhana Sheikh joining with more details from the report. Shubhana, any specific companies that have been mentioned in the report?
They have mentioned, yes, they've mentioned certain banks who have exposure to, these microfinance companies like Bandhan Bank, which has a 45%, MFI loan book exposure, IndusInd Bank at 9%, and AU Small Finance Bank. But they still remain neutral on these banks, but they haven't mentioned companies as such. Now, the reason behind, them highlighting this is, after the fact that MFIN, who is the self-regulatory body, last week had announced had tightened certain rules for the MFI industry. Now, what the UBS report basically says is that portfolio at risk, which means that loans that are defaulting of the outstanding loan portfolio of a particular borrower, that has risen sharply in the month of October as compared to let's say March to September. So in the month of October, these portfolio at risk, which is PAR, that has risen by 130 basis points just in October as compared to let's say a 380 basis point rise in March to September. Now, another data point that they have highlighted is that 1 to 30 days past due loans, for the whole MFI industry, that has risen by 30 basis points on month in October, while for March to September, it had risen by 170 basis points. So it shows that defaults are at a rise. They're rising sharply. Now, what UBS expects based on this data points is that they're expecting more loans to consistently move towards NPA, and slippages are expected to remain quite high in the second half of the financial year for most of these MFI companies. While floods and other natural calamities had affected the collection efficiency of most MFIs, but the pace of rise in delinquency actually shows that the over leveraging that is happening at the borrower level, that is not going to resolve on its own. So and also the management commentary that we've seen in the July-September quarter, that where they said that they expect this stress to get over by the end of this financial year. They seem that management commentaries are quite optimistic. Now, earlier on Monday, MFIN, which is the self-regulatory body for MFI, had tightened these rules, and they said that they have to cut the number of lenders to a particular borrower. Let's say a borrower has exposure to 4 loans from 4 particular lenders, so they're going to cut it down to 3. The tolerance level would be 3 as compared to 4, and they've also capped the maximum indebtedness of a borrower to 2 lakh rupees, which includes micro and unsecured retail loans. Now, while UBS Securities, sees this move by MFIN as a net positive, but they expect that this could actually reduce the liquidity of a weaker borrower, and that could result in a quicker rise and pace of delinquencies in the second half of the financial year.
Okay, thanks for that, Shubhana. So interesting pieces around that, and the discussions around this topic, I think, will continue because it's I think the last couple of quarters in particular have shown some chinks in the armor of some of the players here, and therefore needs to be spoken about with even more. It just doesn't have a shareholders impact. It also has other collateral damages since the borrowers are in some cases are unable to pay at all. But Nifty Finance about 0.25% or 0.75% higher in trade. Interesting moves there. What else? Actually, we're talking about some stocks which were active since the markets are looking up in the green. Do you track any of these movers which have inched up in the last few minutes of trade, Mr. Chokalingam? I want to bring up Avalon Technologies, that's knocking on the doors of 970 after a very stupendous quarterly performance, and then brokerage notes coming out and recommending that stock. I think the last 1.5 months, it's had a fabulous run. What do you do now with an Avalon Tech if you track this one?
Sorry, I haven't tracked. Suddenly in the last couple of years itself, more than 1,000 companies have been listed, including small micro caps. So it's going to be difficult for us to track all this. So I haven't tracked it.
Okay. What about you, Kunal? I mean, it does have a recent history of a very sharp uptick. Can it do more?
Yeah, I think definitely from the current levels, what we have seen a very good rally on the higher end. The next immediate resistance, what I see for the stock, based on the technical, that is the next target, what it can achieve is 972, 973 on the upside. From there onwards, probably you can get some selling pressure from the stock as well. So I think from the current levels, 10 to 12 points more upside is left. Then we might see the stock showing some profit booking towards the levels of 875, 880 on the downside.
Slowing demand continues to trouble auto companies and is casting a shadow over November sales figures. Puneet joins us to share more details. Puneet, this is the preview for November. Wouldn't you ordinarily expect a bit of a downtick as opposed to and when compared to a festive month?
Well, definitely, it's a mixed bag, and especially as you rightly said, we had the festive period, Diwali, this time the auspicious first couple of days, 3 days in 28th of October. So a lot of come is that. Another negative point is that in the same time last year, which is November, Diwali was in November 14th to 18th. So because of that, the base effect is very strong for all these companies. Despite that, analysts are expecting some companies to outperform and show some growth as well. So it is expected to be a mixed bag overall, but there are some new winners, especially the likes of Maruti Suzuki. But let's start with, the first company, Bajaj Auto. It's done very well over the last 6 months, but it's going to be roughly about a 2 to 3% growth itself compared to the same time last year. It's also essential to not look at the month-on-month number this time because, Diwali was in October and, it's a very heavy base again on a month-on-month basis. So we'll focus on the year-on-year. So Bajaj Auto, 2% growth. Let's move on to TVS. It's going to be the highest growth, 6 to 7% amongst the two-wheeler pack, according to analysts from Jefferies, Motilal Oswal, Nuvama, among the others. They mentioned that, for TVS, it is a consistent performer and is likely to post the highest growth as mentioned. Let's look at Hero as well as Eicher Motors also very quickly. Hero is expected to be about 3% down, while Eicher Motors another expected to be roughly about 2 to 3% growth in this particular year. So watch out for Eicher Motors because it had roughly 110,000 units sold versus an average of 80,000. So it's expected to be around 82,000 this time. Commentary has been very strong. Let's see what happens. But four-wheelers, again, very interesting trends. Mahindra, again, continues the outperformance. The Thar maker has been doing very well in this particular year, 11% growth. But, the growth is slightly lower because, the base effect hasn't been as strong because, a lot of launches have happened this year, the 3X as well as the Thar. So watch out for Mahindra, might surprise on the upside. The other one's Maruti. And, we have seen a lot of launches by the company this year, especially with the Desire. And it's being the first product of Maruti to have a 5-star safety rating. That's key because that's been one of the contentious points for the company versus Tata and Mahindra. Watch out for Maruti to be the most surprising pack and the company in the whole auto pack as well. Finally, Tata Motors, another 5 to 6% fall, a very disappointing year continuing. When you look at the commercial vehicle makers, it's for the first time in this particular fiscal year, a positive growth for most companies. So a 3% growth is expected for someone like an Ashok Leyland, but Tata Motors on the commercial vehicle side is going to surprise investors. That's what, analysts are expecting. A 13% growth is expected from Volvo Eicher, and when you look at Tata Motors also on a year-on-year basis, expected to be around 11% growth, so very strong. Finally, on the tractor makers, the divergence continues between Mahindra and Escorts. Escorts expecting a 2% fall in this particular month versus someone like a Mahindra who's expecting a 4 to 5% growth. So overall, it's a very, very interesting month, expecting a downtick, but there are some surprises like Maruti, definitely. Mahindra is continuing both on PV as well as, on tractor side, and TVS and Eicher will be something to watch out for.
We had an interesting conversation this morning with Rakesh Sharma of Bajaj Auto, who is expecting 8% growth in the coming quarters on the back of strong rural demand. Listening.
We started the year with an expectation of about 6 to 8% growth in the motorcycle industry. And it started off slowly in Q1, Q2, but picked up, and particularly picked up very well in the festive. I think the next few months, we should be looking at, for the industry, a growth of about 8% or so. Now, it could lie between 6 to 10%. So I'm saying about 8%, which according to us is a very healthy growth, particularly if you break down that growth. between the the higher end of the industry, which is the 125cc plus, which is going to be in double digits, and which is healthy because that's the where you get better revenue and better margin. So that's a very good sign. I think various factors, things like a reasonably stable economic backdrop, advancing penetration of retail finance, a reasonably okay monsoon, which is ensuring that the small town wheelers moving. All these things are combining to say. But of course, there are issues like the very bottom end of the market, whether there is enough economic inclusion to lift those people up into the consumption cycle. We are still seeing a little bit of softness over there.
It'll be interesting to see what the auto names deliver, and if indeed Maruti can spring a surprise, or M&M via its tractor business can spring a surprise or not. Remember, it's been a good performing stock, M&M. Now, Kunal, before we take in your closing strategy, actually couple that up. Let's talk about M&M, which is at 2966, currently 2.5% higher. What do you do here? Couple that up with your closing strategy for the afternoon.
Yeah, I think firstly talking about M&M, we have already seen the entire auto space. The auto index has been in a big downtrend where lower high, lower low formations have been there. On the contrary, we are seeing positive trend in M&M. So if I look at M&M, it has been forming higher low formations on the daily chart. So again, it has taken a support at its 20 DMA. So you can say it is at on a short-term basis, it is at a major make or break level for M&M. So M&M at the current levels with the rising trend line support, one can initiate a buy, keeping a stop loss of 2,900 on the downside, and look for targets of 3020 to 3050 on the upside. And for the closing trade here, I would like to highlight Hudco, that is Housing Urban Development Company. I think very strong volumes in yesterday's trading session, plus in today's trading session. The stock is likely to surpass its 200 DMA, which is a trend reversal for the stock as well. So I think here it can do well. 239 is what currently it is trading at. So one can initiate a buy, keeping a stop loss of 230, looking for targets of 245 to 250 on the upside.
So Hudco is a good bet. What about an LIC or an ICICI Pru, Kunal?
So I think both LIC is also looking very good, strong surge of volumes which have been there in LIC. But the next hurdle for LIC is again at the 200 DMA, which is placed at 991. So if in Monday's trading session, if it breaks 991 and sustains above it in the first trading hours, then probably one can initiate a long looking for targets of 1020 on the upside.
So just stay on with us. We're shifting focus to macros because post-market close, the big story is going to be Q2 or the second quarter GDP numbers for the Indian economy expected out today. And economists believe we could see growth at 6.5%. Pallavi joins us back from a very exciting break. Pallavi, great to have you back on air. What do you expect from the print today?
Hi Tamanna, so it is indeed going to be, we're going to be watching out for quite a lot in the upcoming Q2 figures. Like you've mentioned, GDP growth is estimated to come in at 6.5%, and that's according to economists polled by Bloomberg. GVA growth is expected to come in at 6.3%. Now, if that is indeed the case, then we are going to be seeing GDP growth slow down to a 6-quarter low. What does this also mean is that we might see downside risks to the full year forecast as well. Just for a quick sort of recap, the RBI projects GDP growth to come in at 7.2% for Q2, and for the full year it expects GDP growth to come in at 7% at this juncture. Both figures appear unlikely. Now, looking through the details, what is expected to be good news is Agri GVA, that is expected to see a rise compared to what we saw in Q1, and that's on the back of elevated Kharif production estimates. What we are going to see some loss in momentum is industrial GVA, with mining and utilities likely to come in.
Consumers or EV buyers, how to remain relevant to those consumers, those buyers. At the same time, we have a very strong connect with OEMs who are doing currently, let's say, ICE vehicles, and tomorrow they may venture into some sort of EV models they may bring out. So how to use those strengths and our distribution network? With that thought process, we started looking at the sector, and what we came through was that manufacturing of chargers is a good opportunity. And as the EVs grow, there will be a requirement of more and more chargers for EVs. And that's where we started acquiring companies. We acquired a company called Indra Technology in UK, and their expertise is slow chargers, slow AC home chargers for cars. And then we acquired another company in called Tyrex Transmission, based out of Ahmedabad. They are having DC fast charger products. So we have now complete end-to-end charger solutions for any of our consumers, buyers, customers, OEMs. So right from AC chargers to fast DC chargers, we have a complete range.
Right. Manish, at least as far as Tyrex is concerned, we understand that you had strong revenue growth in the second quarter. Even your other acquisition, taken together, can you give us an idea about kind of contribution that these companies can bring forward to your consolidated numbers, if not for the next 6 months, for perhaps the next 18 months?
See, our objective in Tyrex, particularly where we have 51% stake, and they are fast growing. When we acquired this company in October 23, their last reported FY23 turnover was 12 crore rupees. So on a very small base, then we doubled it in FY24 to nearly 25 crore rupees. And as you rightly mentioned, in H1 itself, Tyrex has delivered 25 crore so growing at nearly 300% over H1 last year. So this company, overall, the demand is very good. And we believe that the company can at least double the turnover every year for the next 3, 4, 5 years. And should be easily doable, which means that we are aiming at roughly 500 crore rupees at least turnover in next 3 to 4 years from this acquisition.
And when it comes to profitability for both these companies, Manish, what's the way forward? When can we expect them to be in the black?
So currently, they are EBITDA neutral at this stage. What we are also doing is that the company is investing into R&D. Company is investing into a lot of service network required for servicing those chargers and installations and all those capacities, plus strengthening the manpower. We are expanding the capacity of the plant now. So there is a lot of investment which will be there in these building the company into a very, very formidable company, a very strong player in the market. But we believe that once we reach a size and turnover scale, the company should be able to deliver at least 12 to 15% EBITDA margins, which is what the lubricant business is doing. So it will not be a margin dilutive business on the consolidated basis.
And I think going forward, we will have officials from the Ministry of Statistics with us in these press conferences, so that questions related to statistical estimations, they will be able to shed more light and offer better perspectives than I will be able to do, since I will be coming from the macroeconomic angle. So I just wanted to inform you about the presence of these two officials on the call, and my sincere thanks to them for being here. I think advanced economies, I talked about the fact that manufacturing and mining have been principal causes of the slowdown, and especially coal, natural gas, and crude oil constitute nearly 50% of the mining sector, and they have been tepid in the second quarter, and that is the reason. But if you look at the global scenario, you can see in the second quarter, manufacturing purchasing managers indices came down below 50 in the European Union, and also globally in general it was below 50, whereas in the case of India it has remained above 50, emerging as you can see on the right side of your chart. So there is an impact coming from the global supply chain uncertainties, partly because of the unexpected growth under recovery in the in China, which also led to concerns about higher imports from that source, from that country, which would have also had an impact on domestic prices and therefore domestic manufacturing. And some of you may recall the press conference and statements made by Mr. Narendran of Tata Steel in this regard not so long ago. And also geopolitical risk and uncertainty flared up in the second quarter leading up to the presidential elections in the United States. More importantly, there has been a very big spike in trade uncertainties as the election season progressed in the United States. So, and the global supply chain pressure index also went back up below zero. So we want to put the second quarter slowdown, which is while most of us anticipated it, in the light of the excess rainfall and therefore lower footfalls in purchase of consumer durables and also some religious observance days falling fully in the month of September, we wanted to give you some more perspective on the higher than expected decline in the growth rate, which is the second derivative, and global factors play a role, and some very specific sectors in India within manufacturing and mining are also playing a role. So one should be able to interpret the slowdown, therefore, in the right perspective. And that is why these global developments naturally showed up in the suppliers' delivery times index becoming slower, and also growth in new export orders moderated much more sharply in the case of India's manufacturing goods. So there is a shadow or a spillover from global factors on domestic manufacturing, which is what we see in the data as well. But however, what we need to focus on, remembering the fact that we are already 2 months into the third quarter and the current financial year is barely 3 months and a week away from concluding. But I think by and large, we should expect to see the growth in second half of the current financial year when it is reported. We will get the first estimates in January, the advance estimate, and then the first preliminary estimate in February, and of course the other estimate in May as well for the full financial year FY25. So what we are seeing in this slide is the fact that Kharif production has been very high, both in the food grains and rice, and also there is higher MSPs, which should incentivize Rabi sowing. Storage reservoir, water storage in reservoirs is very adequate for the Rabi crop, and fertilizer availability is at comfortable levels. So the kind of pickup in agricultural sectoral growth that we have seen in the last 2 quarters, we expect it to continue in the second half of the year as well. Industrial activity, as we said, continues to pick up in the expansion zone, and I think fuel consumption, as you can see in the bottom table, compared to July, September, October was higher, and so was power consumption. And the uptick in e-way bill generation from 10.9 to 11.7 from August to October is also encouraging. Services sector continue to be resilient. Services sector PMI is being consistently in the expansionary zone, and UPI transactions, both volume and value, have seen a sharp uptick in October, and there is double-digit growth in air cargo activity while port traffic remains steady. Moving on, I think we all know that the passenger vehicle sales in October helped the industry clear a lot of inventory, two-wheeler and four-wheeler sales, and domestic air passenger traffic handle has not only seen a level shift up in the volumes compared to the previous 2 financial years, but you can see the slight upswing on the right side of the right side chart in the green line in September and October as well. Rural demand has been a bright spot, as we have been writing in the monthly economic review, which we publish around the third week of every month. On the left side, you can see about 7 consecutive quarters of growth in rural demand based on the Nielsen IQ data, and two-wheeler and three-wheeler sales as well in rural India, while tractor sales is at an all-time high because of the expectations of a good Rabi crop on the back of a Kharif crop as well. Inflation in general, apart from very specific items in the food sector, in the food category, and also precious metals, in general, it has been on the lower side. And the Indian Institute of Management Ahmedabad's inflation expectations, business sector inflation expectations survey has been pointing to declining inflation expectations rather than rising inflation expectations, confirming the fact that there are no second round effects coming from higher food prices, which in any case is concentrated in a few commodities. When it comes to the external sector, while the second quarter GDP data show that export growth indeed slowed down, I mean, we have seen that the export growth rate is 2.8% year on year compared to 8.7% in the first quarter. The fact remains that outside of petroleum, gems and jewelry, merchandise exports are in high single digits, and together with services, this core merchandise exports, excluding petroleum products, gems and jewelry, and together with services, we have seen 10.8% growth in the first 7 months of the current financial year compared to the 7 months of the last financial year. So I think in general, towards when the full year's data is out, we will see that net exports would have made a good contribution to overall economic growth than in the previous financial year. Yes, we are aware of the fact that in the month of October, there was profit taking or profit booking in the Indian stock market by foreign investors, also partly because of renewed excitement about China, shifting of some capital out there. But by and large, if you see on the left top chart, both gross FDI flows and net FDI flows are doing far better than they were doing last year so far in the first half of the financial year. And Indian domestic investors, both institutional and retail, continue to have faith in the Indian capital markets, providing it a certain measure of support and undergirding, so to speak. Well, there is concern about capital formation based on second quarter data. However, that is what prompts us to dig a little deeper and go into what's happening on the underlying drivers of capital goods. If you look at the capital goods imports and their share in total imports, they've been steadily rising. And also, if you look at the increase in capital and infrastructure goods production, in the IIP, Index of Industrial Production, there has been a slight and steady uptick over the last several financial years in the first half, if you compare first half to first half of each financial year. And then if you look at the order books of capital goods producing companies, they are up 23% last year, which augurs well for private capital formation. That said, we acknowledge the fact that while we are talking about capital formation being critical, we should also remember that the global context keeps evolving and uncertainties are cropping up every year, whether it is the strength of the dollar, whether it is the potential for trade action elsewhere, and cheaper imports. There will be headwinds compared to the first decade when India's capital formation was growing at very rapid rate. So we need to also to be realistic about the expectations for growth in general. While the trend is promising and the signs are good, we need to be aware that the global context is not the same as it was in the first decade when there was synchronized global growth, resulting also in capital formation growth. But as I said, private investment is gaining traction. This is basically new investments announced by the private sector has increased in Q2 in July to September quarter of this year compared to the July to September quarter of last year. Therefore, together, we are still keeping on track with the announcements compared to the last financial year in the first half. The banking system liquidity is now more comfortable than it was, and that should result in better credit growth, although credit growth in the first half of the financial year has moderated to a level of around annualized growth rate of around 10%, which is in line with the nominal GDP growth. And I think from the point of view of the economic growth objectives, I think credit growth, if it picks up in the coming months, it will also support economic activity in the coming months of the financial year and beyond. In the labor market, based on the quarterly data available for the urban labor market, we do see that labor force participation is picking up and unemployment rate is holding steady. The net payroll additions in EPF subscribers, particularly in the lower age category, young cohorts, net new joiners among the young cohorts in EPFO also has been rising steadily, in the sense that there is job creation or formalization or a combination of the two in the formal sector as well. I now turn from the GDP data also to talk about some of the underlying reasons for manufacturing in certain sectors, because if you look at the manufacturing sector and try to break it down, out of the 23 sectors in the index of industrial production, 12 of them registered very high single-digit growth on average, about 9%, and 11 of them were almost close to registering zero growth in the first half of the current financial year compared to the last year. And these are more of consumption items rather than intermediate goods in further production. Why is it the case? And some of it has to do with the fact that I think both hiring and compensation practices in the formal sector have undergone a change post-COVID, despite the fact that profitability in absolute terms, profitability in terms of growth rates, and profitability as share of GDP have been at a 15-year high. If you can see that the share of regular wage employment is, after a big drop in the COVID year to 21.1%, has picked up, but picked up very slowly to 21.7%. The good news is that the casual labor share has gone down. Overall, and self-employed rates have gone up. The other good news is that I hope this results in pickup in hiring by the corporate sector for regular wage and salary jobs, is the fact that Indians are taking to skilling in very, very significant way. If you look at both female, male, and the overall adoption of skilling, both in rural India and urban India, especially between male and female workers, there has been an unambiguous enthusiastic adoption of skilling, and therefore we hope to see this reflected in the rising share of regular wage salary workers. And we should also see this hopefully in real wage growth. What we are seeing in this slide is that the real and nominal wages in rural India for males, females, and in total between males and females put together, what you see is significant growth in nominal wages, but not so in real wages. Of course, we must understand that in rural India, the food component is higher, the rural CPI, and therefore, and the fact that the food inflation rate in the last few years has been slightly higher, although it is dominated only by a narrow set of commodities, that is one of the reasons why the real wage growth in rural India is somewhat lower or even negative, because of the higher weight of food items in rural CPI, despite its domination in a few commodities. But in urban India, it is interesting to note that real wages of males has actually increased over the last 5 years compared to pre-COVID, from 13,426 rupees to 13,834 rupees. Nominal terms, you can see that going from nearly 18,000 to 25,500. Female real wages a slight decline, but overall real wages have gone up from 12,847 to little above 13,000 compared to 2017-18. And also you can see the slight pickup compared to the last 2 years as well on the real wage growth. So real wage growth for urban male workers has done very well. And therefore that is reflected in the overall positive real wage growth. But nothing of this compares to the kind of profitability growth that we have seen. So if you notice that the profit to GDP ratio was 4.8% in FY24, The peak was 5.2% in FY 2008, but that was a different era when global growth was high and exports were booming, and overall economic growth rates, both in nominal terms, were in high double digits or mid double digits and high single digits. Considering that post-COVID recovery in profit from 2.1% of GDP to 4.8% of GDP is an impressive growth in the last just 3 years post-COVID. But in comparison, both hiring and compensation growth rates have been somewhat on the lower side or tepid. And that is also somewhat endogenous in creating less purchasing power in the hands of people, less demand for FMCG goods and light consumer durable goods. And that is why you see the impact on that in manufacturing. So to some extent, the private sector's manufacturing slowdown in select areas is somewhat self-generated. In the outlook for the near term, of course, I think while the actual print of 5.4% in real terms is on the lower side of the expectations, the economy is resilient, as you saw in the case of construction, agriculture, and manufacturing. As I mentioned, 12 of the 23 sectors registering high single-digit growth, etc., and exports performing outside of petroleum products, gems and jewelry performing much better this financial year compared to the last. There is plenty of positive signs to take away in terms of the economy showing resilience, underpinned by steady demand and strong, partially, I would say, strong manufacturing and service sector activity. Record production estimates for kharif food grains and promising rabi crop prospects. Labor market is recovering, but as I explained to you in the last few minutes, we can do far better than what we have been doing, and the onus rests with the private sector as well because of the endogeneity of labor income growth and demand for manufactured goods. So better growth in labor incomes holds the key to sustained demand growth and capital formation in the private sector. Global crude oil prices are remaining low, and we think one of the possible benefits of the new administration taking office in the United States in 2025 will also be continued low energy prices, which is a very important ingredient because the counterfactual will be quite significantly growth negative. So energy prices will remain low and affordable and internationally, and that's a very important growth positive for India. What are the risk factors? Geopolitical conditions do remain fragile and will continue to impact domestic inflation if supply chain disruptions occur. And same will be the case with capital flows. They will also be impacted by potential tariff actions, which will impact both trade and capital flows. It may also lead to strengthening of the United States dollar, leading to shortage of dollar in global markets, causing exchange rates in emerging economies to depreciate, which would also tighten liquidity conditions in emerging economies, etc. And even if we have very ample foreign exchange reserves, as we do, and we will do far better than many other emerging economies, given the fact that we have a good interest rate support and foreign exchange reserves, we will not be exempt from the spillover effects when these conditions happen. So we should be quite realistic about the kind of world scenario, global scenario that we will be facing in 2025. And because of that, exports also face greater uncertainties. But we should also work on improving the state capacity to spend on capex across the country, and also the capital versus labor mix in the growth plans of the private corporate sector. As I discussed earlier, in terms of hiring and compensation, will also be an important determinant of how we can ramp up the growth rates and the overall regulatory environment. I mean, as we are seeing, even developed countries are beginning to focus on deregulation as a very important formula or ingredient for reinvigorating growth. And I think if we have to realize our employment, manufacturing aspirations, I think, and also therefore aid capital formation and investment, we have to double down on deregulation, particularly among state and local governments, and that will cause both the trend and the actual growth rates to pick up from 6.5% towards 7% and so on. So while the number may have been somewhat disappointing for second quarter real GDP growth, I think we should also use it as a good opportunity to put in place not only hiring and compensation policies and practices in the private sector, but also use the opportunity to double down on deregulation and think of enhancing state capacity for undertaking public investment rather than revenue expenditure. If we do that, then I think sooner rather than later, the second quarter growth numbers will become distant and fading memory. That's all from my side. Thank you very much. We are open to your questions. As I said, I have with me the DDG from Ministry of Statistics and virtually the Additional Director General present here. Thank you very much.
Thank you so much, sir, for throwing light on the sector-wise trends and also for the outlook for the near term. Now, I would like to invite questions from the media. So, sir, I have all of them in a this thing. So I'm going to take the questions one by one. First of all, we have a question from Mr. Surya Murthy of the Telegraph. I think he has some technical problems, so I'll ask his question. So Mr. Surya Murthy wants to know, do you think it is time now for RBI to cut rates?
No, I think it is. We have always maintained that we will not comment on monetary policy in public. I mean, all of us see the data. Central Bank is also seeing the data. They know what to do, and I will not be commenting on this question. Next question, please.
Yes, Mr. Lakshman Roy from CNBC.
Hi, sir. Lakshman this side. My question is, since you have projected economic growth in economic survey from 6.5% to 7%, now giving the number of Q2, do you think 7% is feasible, even 6.5%? And second question, since capex growth is also slowed down in Q2, so government should push more in capex?
Yeah, no, in response to your first question, I think we will go back and take a look at the possibilities of what the final outcome will be in terms of the eventual growth numbers for the full year. But let's also remember that these are first estimates in some sense, and our data are not seasonally adjusted, and the full year growth rates for FY25, you will get the first cut estimate in January and then February and then May. So I think it is too soon to say that even the 6.5% number is in danger. So I don't think we should extrapolate too much. Now, as far as the capex is concerned, as I said, the capex slowdown was across all levels of the government, union, state, and central public sector enterprises. So there is definitely a need to examine the impediments that stand in the way of capital formation. As I said, some of it could have been due to excessive rainfall in the second quarter, uncertainties related to the election season, and therefore capex has room to ramp up in the remaining 3 months of the year. Right now, as we speak, November data, we don't have it yet. So I think, again, the numbers are there for all to see, and therefore capex growth will pick up in the coming months is our best hope. Next question, please.
Sir, before we take the next question, I would just like to make an observation that request Mr. Sanjay Kumar and Dilip Sinha that to also take note of the questions in case they have additional remarks at the end of the question and answer session.
Yeah, in fact, I told Mr. Dilip Kumar Sinha after my presentation was over, before we went on to the Q&A, whether he wanted to say anything. Please go ahead. I don't know if the camera, you may probably come a little bit closer, pull your chair and be the cam. Yeah.
Yeah. Good evening, everybody. Am I audible? Yes.
Yes, you are audible.
Yes, sir. Yes, sir.
Yeah.
Yeah, Chief Economic Advisor has already covered the entire gamut of this story very, very nicely. Just I would like to add one thing. As he mentioned that the manufacturing sector could not perform well. Even the thing is that though the output of manufacturing sector was modest, but the
Stocks have been surging in the past 2 days of trade. More good news overnight for the group. Agam Vakil has the details. Now, Agam, give us more in terms of what you're picking up on this.
So we have a whole host of institutions and entities across the globe coming in support of the Adani Group companies, especially following and in the wake of the group releasing that statement suggesting that the key members in there, Gautam Adani, Sagar Adani, as well as Vineet Jain, have not been implicated when it comes to certain charges with the FCPA. And on account of that, we have more and more good news coming in. I'm going to start off with Kerala, right at home, where they have in fact signed a supplementary concession agreement with the group when it comes to the Adani Verinium Seaport. And this actually paves way for, well, earlier than expected when it comes to revenue gains from the Verinium Seaport. Of course, the port will be fully operational by 2028, but it's not just Kerala. Moving on to, well, the former Andhra CM, Jagan Reddy, who has also refuted claims with respect to bribery and the Adani Group, and in fact has also suggested that he may look to sue for as much as 100 crores when it comes to media companies reporting these incorrect, allegations. Moving on, we also have a lot of updates coming in from Africa. Tanzania has in fact extended its support. Back in May of 2024, the Tanzania government had signed an agreement with the Adani Group company. This was to operate one terminal in Dar es Salaam, and well, Tanzania is suggesting that there's no change in that agreement. Neither has there been any change with agreement when it comes to the Sri Lanka Port Authority, where once again the chairman has said that they're not looking to cancel any of these terms of agreement. Well, moving on, we also know that Abu Dhabi's IHC is unworried about the outlook of the Adani companies, and they haven't made any changes with respect to their investments in the Adani Group companies. But even later on today, we had an update from CRISIL where they have in fact reaffirmed their positive outlook, and they cite strength of the group's financial and business profile. And they also say that allegations haven't led to any negative actions from lenders or investors. And in the latest, we also have a whole host of Japanese banks lending support to the Adani Group company, where in fact someone like Mizuho Financial Group has suggested that the charges will not have any long-term implications, and there are no plans to pull back when it comes to Sumitomo Mitsui or Mitsubishi UFG Financials. So all in all, a lot of entities from across the globe coming in support of the Adani Group companies.
Well, the Ministry of External Affairs has come out with a statement on the US case against the Adani Group, saying that this is a legal matter involving private firms and individuals. The US Department of Justice, Rishabh, sent in this report earlier.
India's Ministry of External Affairs has come out with a statement after it was questioned in a routine briefing about the indictment against the Adani Group and several of its directors. The MEA has said that this is a legal matter that involves private firms, the US's Department of Justice, as well as private firms. So it is not party to any of these issues, and it has said that there are established procedures and legal avenues in these cases that, which it believes will be followed. It also said that it has not received any sort of a request from the US on this case in terms of a request by a foreign government for a service of summons or in terms of anything that is related to arrest warrants. It did mention that any request that it receives will be examined on merit, and it also added that the government was not informed on the issue in advance. So the MEA with a statement there on the Adani Group.
Well, India's GDP grew at the slowest pace in 7 quarters, led by slower growth across the industrial sector. It grew by 5.4% in the September quarter compared to 6.7% in the previous quarter. Vishwanatha and Pallavi join in with a breakdown of the key numbers.
the latest quarterly GDP growth data that's coming in for the second quarter, July-September quarter, GDP growth is at about 5.4%. That's what the government is saying. That is much lower than the 6.5% estimate that was already there from economists. Not only that, this is the lowest GDP growth number in 7 quarters, and that's why this data is very, very important to sort of cut and slice and try and understand what's actually happening behind the picture. And that's why we're calling this the Q2 GDP shocker. Now, in the graphics that are going to come up on the wall behind us, we're going to talk about what exactly happened here. July-September GDP growth has slowed to 5.4%. This is the slowest in 7 quarters, as we already mentioned. We have also seen that 6.5% was the estimate by economists. That has not been met. In fact, it's far away from that. It's also far away from what the RBI estimated for the second quarter, which was 7% GDP growth for this financial year, second quarter of this financial year. It's much lower than that. Now, what exactly happened behind the scenes? Now, there are 4 key reasons why exactly this growth number have not been met. And I'll throw to my colleague Pallavi to try and explain to us what these 4 reasons are. Pallavi.
Right. So like you've mentioned, the number is substantially lower, not just from the Bloomberg poll of economist estimates, but it's also even lower than what the RBI was targeting, which throws up the big question regarding whether we're able to now meet the full year forecast, which was at 7.2%. That was already a fairly lofty target or a fairly lofty estimate, according to economists. And given the Q2 shocker of sorts, that sort of puts that number into even greater jeopardy, because it's very unlikely that we're now going to be able to meet that figure for the full year. A lot of economists have already begun revising their full year forecasts, and they're closer to anywhere between about 6.5% to 7% now for the full year. Like you've mentioned, multiple reasons for this weaker than anticipated figure. The key disappointment was definitely from industrial GVA. So construction, utilities, and manufacturing, of course, which came in at 2.2%, substantially lower than what we saw in the same quarter an year ago, and also significantly lower than what it was in Q1. Of course, partly because of the seasonality, Q2 did see an extended southwest monsoon. But even factoring in that, the figure is lower, and it remains to be seen whether we're able to make up in manufacturing GVA going forward. Construction, again, critical also, Vishwanath, because construction has been one of the key drivers of employment in the last several years, especially post-pandemic in the economy. And a lower than anticipated construction figure also throws up questions regarding employment prospects for a very large number of people who were finding work of some sorts in that space. So it is important for that sector to continue to grow at a strong pace. The last quarter, of course, we saw double-digit growth in construction. Agriculture was, of course, better than expected from Q1, and services was broadly holding up. But of course, on industrial GVA, it's more of a wait-and-watch mode for now. In terms of expenditure side trends also, while we have seen mixed indicators from urban as well as rural demand, with rural demand showing some sorts of recovery. Urban consumption was, of course, iffy in Q2. That has shown up in the numbers as well. Whether that's recovering or not is something we're still watching out for.
Right. Pallavi, you mentioned urban consumption, that there is an expectation that with better than expected sort of crop in the second half of the financial year, you will see that improving. Rural demand, as Pallavi said, is holding strong. There's also this festive season as well as wedding season sort of push to demand that is coming in towards the end of the financial year, which is hopefully going to push up the growth number. But as Pallavi said, the 7.2% number that the RBI has seems a little suspect right now. The CEA mentioned that this might be too soon to sort of expect that, but let's see what happens in the next 2 quarters. But that's the Q2 GDP shocker for you.
Now, the Impact Foundation conducted its 10th annual donor meeting today at the Tata Memorial Centre. Impact Foundation was established in 2010 with an aim to provide best pediatric cancer healthcare. The foundation also provides education and other help to ailing patients while they are undergoing treatment. Now, every year, nearly 4,000 children are treated across the country. Till date, over 20,000 children have been completely cured by the foundation, considering that the patient needs to live in the city for at least 67 months for blood transfusions and other related treatments. Nearly 25% of the children abandon treatment midway. This rate has been brought down to 5% by the Impact Foundation. Now, the cure rate of the TMC and the Impact Foundation together is around 80%. The leadership of TMC and Impact Foundation have requested for people's support towards the